Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, November 1st. We are in November officially, and we've got 2 months left of the year. This year has gone by pretty quick, but October is officially done. Yesterday was the last day of October, and now we are here in November. We got a lot of stuff to talk about. Yesterday was a pretty big day for the markets. The big story of the pre-markets right now is Amazon, which absolutely crushed earnings. And the reason Amazon crushed earnings is because, in my opinion, the street finally is happy that something increased that needed to increase over the past couple of quarters. And that is these operating margins for Amazon. Look at Amazon right here, up 6.7%. It did touch 200 in the pre-markets, now at 199.25. It looks like there's a good shot Amazon could potentially break through that $200 wall. And I think this earnings was definitely a way for us to get there. So we'll talk about Amazon. You also got Apple down about 2%. Their earnings were okay, not amazing. And so the street's a little upset about that. NVIDIA up 1.29%. And then Intel had a decent earnings, but they're firing close to 20,000 people, which is why I think the street is actually happy because their costs are going to come down. And that's why Intel right here is up about 7.53%. But before we get into all of that, we have jobs data, non-farm payrolls. And I'm not going to lie, when I saw this number immediately, I don't know if you guys saw this number yet. If you didn't, you're probably going to get a kick out of this number. I was a little surprised, just a little bit. And I was looking at the number and I was like, okay, so why is the market not down like 4 or 5%? But then you realize the wisdom of the markets is that they price in literally everything. And when I mean everything, I mean they price in literally everything. And so it seems like this was priced in. So non-farm payrolls was 10,000 or 12,000 jobs added. The street wanted 113,000. So the street wanted over 100,000 jobs. We added 12,000. Thought it was a typo. Right, exactly. I thought it was a typo. Is one of those things where I was looking at the number and I was like, oh, I don't want to check the markets because this is like god awful. And then I checked the markets, and if you scroll down a little bit, S&P is green. And I'm looking at this like, okay, so I guess there's something that I'm not making the connection for. And apparently it's because hurricanes seems to be the reason for the major miss, which is why the market kind of knew, all right, we have this projection, but given those hurricanes were pretty massive, we're not going to get this number. And as long as the market knows, then it's okay. I mean, this is kind of what we saw in Robinhood earnings, right? The market wanted 650, Robin brought in 637. Is the market, there was a mismatch, boom, everyone sells it off, or they potentially buy it up if it's a mismatch to the surprise, to the upside. But if the market knew this, then there wasn't really anything interesting here, and the market could kind of move on. Same thing with Amazon. I think the market expected close to 10% operating margins. Amazon brought in 11%. Boom, market goes a bit higher. Another reason the market's up right now is because this only further increases the chance of a rate cut. If the labor market is weakening, maybe it's not weakening as dramatically as what this picture shows, given that you have the hurricanes to take into account. But if the labor market still is weakening and September ended up being just this one-time event where we had these many jobs at 254,000, by the way, that was revised to 233,000. And the month before that was revised to about 80,000. Then we're going to get some rate cuts, folks. One of the reasons we were not going to get rate cuts, or where people were thinking we're not going to get rate cuts, is because we had too many jobs. And if you have too many jobs, you have too many people spending, you have too much more chances of inflation increasing. Now it looks like the Fed is on their kind of core argument that they were saying in September, which is if labor market's weakening and inflation's coming down, there's no reason to keep the federal funds rate this high. Look at this. So now if you look at the futures tool, based on this jobs report, yesterday, there was a 96% chance we would have a 25 basis point cut and a 4% chance we would pause. Now it is a 99.5% chance we're going to get a cut and a 0.5% chance we're going to get a 50 basis point cut. So if anything, I think that's why the stock market is up right now, because essentially the jobs report changed the odds to 50 or 25 instead of 25 or pause. And it seems like that's kind of the reason the street is navigating this right now, or navigating like this right now. So let's get some coverage on this, then we'll keep going from there. But that is the jobs data, and after this, we will get into Amazon.
Was kind of closed down, and so we don't have that influx anymore. What might be happening is that initial influx that's been out there, those folks might have found jobs keeping the unemployment rate down. So, and of course, having no impact at all from the hurricanes in that number. I'm looking for the number, and I'll get you that in a second, of the number who were out of work due to bad weather.
Okay, keep digging through that. Joe, you're here on set. Let's talk about what you're looking at. Two phones trying to juggle out. What's the information you're trying to pull out?
Doing the math and looking at the data.
Okay, good.
I'm going to respectfully disagree with the great Santelli and Mr. Leisman as well, because if you look at the household data, you actually lost almost 400,000 jobs. Employment fell almost 400,000 jobs. And more importantly, if you look at private wage and salary workers within the household survey, which is the core number, that was down 102,000. The reason the unemployment rate was stable is because civilian labor force shrunk over a couple 100,000. So this may not look like the great number or ex-hurricane that it's being portrayed.
And your thought is this is telling us what about the economy?
The economy we're at a lot of crossroads in the economy. The GDP data have been great, but the GDP data have been good. We're up, Becky, we're up almost 1.4 trillion nominal dollars in GDP. Sounds great. The problem is marketable treasury debt is up 2 trillion. So in the last 12 months, we've issued 600 billion in debt to fund GDP growth. That was 600 billion less. Wow. That's really the crux.
And look, he's not the first person to say this. Everyone kind of knows, even if you're a bull, a bear, whatever it is, that we are borrowing a lot of money and spending a lot of money to keep up the GDP growth that we're seeing, because it takes money to make money. And, you know, there is an argument out there that game of musical chairs can't go on forever.
And I think why people have missed why GDP has been strong. The government is just throwing so much money into the economy, it can't slow. Is this stuff that was already passed
from the CHIPS Act and beyond, or the IRA?
It's the IRA, it's the American Rescue Plan, it's the infrastructure bill. Some of it's been used. It's a lot of, it's just a lot of money that's there, not all of which has been used yet, and it's underpinning demand.
Steve, what did you say? Did you drop the feed, or did you have something on what Joe was saying? I think we may have lost Steve for a moment. Wendy, let me get to you.
Yeah, I'm back.
Do you agree with it? Okay, well, hold on. Let me get to Wendy's take first, Steve. Wendy, do you agree with what Joe's just saying here? And we hear everything you're saying, Steve. You may not hear us.
I think we have a remarkably strong economy right now. It's true that these numbers the employment numbers are difficult to parse given the strike and hurricane effects. If you look at the 3-month average, and you add back in the noise from the strikes and the hurricanes, we're maybe at about 140,000 a month on average over the last 3 months. That's a good number, not a great number. And I do think we still need to be comparing that to labor force growth that is still being boosted by immigration. Even though the border has been a lot more orderly, we are still seeing numbers this year for requests for work permits and even approved work permits that are higher than they were in 2023. So as much as the flows at the border have become a lot more reasonable and a lot more orderly, we are still seeing higher labor force growth perhaps because of lags in immigration earlier this year. But all said, the fact that we have inflation quite near target and this strong of a labor market is great news. In all but 4 states, the unemployment rate in the latest numbers is below 5%. There's a lot for policymakers to be crowing about.
Steve, I know you have a...
So there's a lot of different perspectives here. What are you guys thinking about what's going on right now? Again, for those that are just joining, jobs report came in at 15,000 or 12,000 jobs versus 100,000. Again, markets expected it. S&P's up 0.5% right now. We were down think about this. We were down 2% yesterday on the S&P 500. 568.64. That 570 level is a level we definitely want to protect if you are bullish on the end of the year. And now we're above that at 572. So I think from a technical perspective as well, the bears are going to have to try really hard to bring it under at least 565 and maintain it there. But also it's kind of remarkable that we were down 2% yesterday. And yesterday there wasn't really any bad news outside of SMCI that affected Nvidia, and Amazon had a great earnings. S&P still ended red. Apple didn't have an amazing earnings, but it still was a decent earnings. S&P was still red. And today it's like the market is so macro event driven, because now that there's a chance we're going to get more rate cuts, a pretty good chance based on this jobs report that we're going to get more rate cuts, where a couple of days ago, there was a question of if we're going to get any more rate cuts this year. You had Ed Yardeni said he doesn't expect any more rate cuts. It's quite remarkable that the S&P is going up just because of the idea that we're getting more rate cuts. Again, the sort of philosophical balance here is that rate cuts means that things are slowing down. A soft landing means that rate cuts can happen even if things are not slowing down that rapidly. And that's why it's a soft landing, because things can still grow even if inflation comes down. That's very difficult to do. And I guess the market is interpreting this jobs report as a way for the Fed to do what they did in September, which is echo this idea that rates can come down even by 50 basis points while growth can remain strong. Now, one thing that's very important to understand kind of about how this is happening is that although I would agree with what some of the guests said, that GDP growth is being artificially created by the government and engineered by the government in a variety of different ways, Q3 earnings have still been good. And I think objectively, everyone can agree on that, from any pharmaceutical company to any bank to a lot of consumer companies. Like, there's anomalies out there that are not doing the best, but 80% of companies are beating on the top and the bottom line. Those are consumers that have money that are able to spend. And the majority of those consumers are not like on unemployment, collecting a check and then going to buy an iPhone, but rather those are people that have jobs, they make money, they keep some of their disposable income, they pay their taxes, and then they go out and spend. And if that still holds up, a lot of this macro data at the end of the day does feel like a little bit of noise because of the results we're seeing in Q3 earnings. If we started to see major retailers and companies come out and say, hey, the consumer's struggling, pretty much every earnings report that I've seen, and I think I've gone through at least 100 of them over the past couple of weeks, I don't see any of the top line letters in the press release say the consumer is not acting the way they should be acting. And we've got Walmart coming up, Target coming up, Home Depot, Lowe's. Will really get an understanding from those guys, but so far consumers are good. So it begs the question now, how macro is the market going to be driven on a question of unemployment versus inflation? I get that GDP growth is a lot of times artificially created by the government. That's kind of always how it's been. But when will people stop spending their money? Like, when will they stop buying stuff off of Amazon so that Amazon can report crappy numbers? Because until that happens, people are going to buy Amazon stock, right? And if this is about the stock market, then this is about what stops these stocks from going higher. And that leads to people, that has to have people ultimately not engaging in the markets with these products and services at the end of the day. Derek says, morning, bitches. Good morning, Derek Wall, with another 50 gifted. I told Derek to stop giving these freaking 50 gifted, but I think he's on a mission to make everyone a channel member. So thank you, Derek. I appreciated that. Imagine if I started the market open every day with morning bitches. That would be it would be quite inappropriate, but it would also be a fun after we ring the bell. Morning bitches. I like wake your ass up better. Maybe wake your ass up, bitches. Maybe that's what we got to do. Thank you, Derek. Appreciate that. Thank you. Okay, so that's what we got. That's what we got for the jobs report. Again, jobs report, not the best. Market doesn't give a shit. 571. It's up higher right here. It is a Friday as well, so that's interesting to see the market go higher on a Friday. Bitcoin getting a little bit of momentum right here, 70,325. We did touch 68,000 last night. Another reason Bitcoin's up right now is because if we have low jobs, we have more rate cuts. That's more liquidity. That's good for Bitcoin. So Bitcoin up about 1.46%, 70,314 right now. S&P 500, again, up a little bit. And then the Qs are up as well, about 0.5% for 86. Another reason things are up is also because, like, hey, wait a second. We had a really bad day yesterday. Yesterday was one of the worst days we had since September 6th. And when you have that bad of a day, I mean, you're probably not going to be red the next day in this market. In this market, it's been hard to have two red days. And maybe that happens when the market opens. But so far, it's been red day. And then there's a lot of money that comes in and it ends up wanting to buy the dip. And as a result of that, we're probably seeing a little bit of a rebound right here in the broader markets. ISM manufacturing, a market mover, maybe. That's going to be out at 10 a.m., right? So we'll see when that comes out. Usually it doesn't really move the markets unless it's really bad, and it's been in a range of like +2% or -2%. So I don't think it would be that crazy unless it breaks out of that range. What happens when we are all members? Who gets the gifted? You get a free, basically being a channel member is $5 a month. And so you get a gift from Derek to be a channel member for $5 a month. But I don't do anything for members because like I do all the content I do is just like out there. There's no like private or exclusive videos or anything. I've just never been that type of person. So if you become a channel member, it's to support the channel. If you don't become a channel member, that is totally fine as well. You guys being here every morning is more than enough. Okay, so yeah, that's what we got on the job report. Let's get into Amazon. Amazon crushed it. Amazon absolutely crushed it. Amazon right now in the pre-markets, I think, is trying to break this $200 range. Why did Amazon crush it? Couple reasons. Number one, advertising was strong, came in line with expectations. Last quarter, that missed on expectations, 198.75. Another reason is their operating margins went to 11%. That is the highest in 3 years. The big sort of thesis on Amazon is that they make a lot of money, kind of like Walmart, but they can't keep any of that money. And this quarter, Amazon proved everyone wrong and said, nope, Amazon is going to make money. They made about $17.6 billion in operating income, which is just incredible. Last quarter this year, or Q3 2023, it was 14 billion. So it's about a 3 billion increase, which is just incredible. And you're also seeing a lot of momentum in the context of their AI business. AWS, I mean, at this point, it's just incredible what Amazon's able to put up here. AWS is doing $27.5 billion in quarterly revenue. It's on a run rate of close to 120 billion on a trailing 12 months basis. North America did 95 billion, internationals did 35.9 billion, then AWS again 19% year-over-year growth to 27.5 billion. If AWS compounds on even 15% until 2030, and you've got the overall business compounding at close to 10%, you are going to be looking at $1 trillion revenue company by 2030. And if you just assume 11% operating margins, which I would imagine by then they get it close to 15, maybe even 20% based on the high margin businesses they can bring on to their consumers. Let's assume 11%. That's $110 billion of profits off of $1 trillion of revenue, which is incredible. Absolutely incredible. So it seems like the street is realizing, you know what, this is one of the more undervalued tech companies in the Mag 7 that's growing. And it's time for us to stop getting mad at them because they're actually bringing up the results and they're putting up the numbers. The question is 200. 200 is what we have to break. And I don't know if we're going to be able to break 200. We do know Bezos, I think, has a SEC filing that he's due to sell at least $2 billion worth of stock at $200. I feel like $2 billion in a $1.96 trillion company should easily be eaten up. But every time we get close to it, it ends up getting rejected. So this is going to be a question today. It's kind of now or never. I mean, like, it's time to break through 200. You got the results you needed. Now the market needs to ask themselves, do they actually want to allocate to Amazon? On the other hand, we have Apple. Apple down about 1.6%. Apple missed on everything except iPhone sales. So iMac, iPad, watches, AirPods, services, all of it missed. Now, they had slight misses, but nonetheless, they did miss, which is why they only grew about 4%. And the iPhone beat by about $1 billion. So Tim Cook did not give any guidance on how many iPhone 16s are being sold or like what level of iPhone 16s are being upgraded. But he did say that he thinks the demand is stable. And that means going into the next few quarters, we're going to see if that demand actually plays out. And if it does, then, you know, maybe Apple just pushes along on its way to 250. If it doesn't, then I think the street's going to have to figure out, why do we pay 34 PE for a company that's not growing? Also, they did give guidance on how much growth they're going to do in next quarter. And that growth is about, if I'm not wrong, 5%. The street wanted 7%. So that's another reason the stock's down 2%, because there's a little bit of a mismatch in terms of Q4 guidance. And that's why Apple's down, but Amazon continues to be up. Fubo just had revenue, or just had earnings, 376 million of revenue, EPS 0.08 cents they lost versus 18 cents. So that's a beat on the top and the bottom. Fubo stock is flat. Seems like market doesn't care. They beat on revenue by 2 million, beat on EPS by 10 cents. Stock is currently flat right now. We'll see if that moves in a little bit. But yeah, stock is flat right now on Fubo. Okay, so that's what we got with Amazon and Apple. Look, overall thesis is great reports on both of those companies. The problem was that, the market sucked yesterday. Market seems to be better today, so maybe those companies can do well. Also, Amazon, Apple, Google, Meta, and Tesla have put up earnings. All of them have been phenomenal. Some of them, again, expectations have not been amazing on a couple of them, which is why they got hit. Microsoft as well, but really strong earnings. I mean, at the end of the day, we can critique Apple all they want. They put up $95 billion of revenue. It's just astronomical. So now the question is, what does NVIDIA do? And then the question is, does the market have the room to expand the multiple from where it currently sits at I think a 21 PE on the S&P 500 to get closer to 25, 26, which would get you to S&P at 6,000. I think if the goal of Q3 was for the Mag 7 to not mess things up, they didn't mess anything up. And I think we can all breathe a little bit and say, okay, the Mag 7 are good. And then all these other companies, can they like lift us higher? And for the far majority of them, including financials, pharmaceuticals, and retailers, at least the ones we've seen so far, they put up their numbers as well. So, and they've raised guidance. You know, like the big story was, okay, what if they do good in Q3, but then Q4, everything breaks loose? Like, no, they're raising fiscal year 2024, which means they believe Q4 is going to be good as well. So I think Q3 is a good story. Now it's a question of the election, which is literally a couple days away, and this the Fed rate cutting cycle right after the election, which is going to be a lot to dive into going into next week. Do you think SMCI will survive this storm? That is a good question. SMCI, let's take a look at SMCI. I didn't even check it in the pre-markets. SMCI is down another 1.68%. Wow. I don't know, dude. I don't know if SMCI survives this. I mean, there is an argument of there's people talking about it's going to get delisted. Now, the thing is, they haven't said anything, right? There's been no public comment by the CEO on everything that's been going on. And that's a little weird because it's like, I mean, your public accounting firm left. You would imagine that people would have something to say, and like we would be able to get some details out of you, or they would hire a new accounting firm soon and like just put out a press release saying we're undergoing change internally. But no, nothing. I wouldn't buy the dip here, dude. I know it looks attractive just because of how down it is, given the growth and the guidance, etc. I mean, the PE now is trading at a 14. That forward PE is 8. That, you know, I mean, SMCI had a forward PE of 6 to 8 back in 2022, and then it went on to more than 10x. The problem is now internally, there's a lot of issues with the fundamentals of this company. And one of those fundamentals is that their accounting firm doesn't want to work with them. So I think that story is going to play out over the next couple of days. NVIDIA was up after hours because Amazon and Apple did say they're spending more on CapEx. So even though SMCI is bringing down NVIDIA and all the semis, NVIDIA was up off the idea that Amazon said they're going to spend $75 billion in CapEx going into 2025. And a decent chunk of that money should be going to NVIDIA. Robinhood right here, 2384, up about 1.49%. I mean, let's see how the street interprets what's going on with Robinhood. Markets do well. Robinhood does well. I think markets towards the end of the year will do well. Again, I looked through the earnings again last night, and I mean, the numbers were really good. It's just the mismatch between what analysts expected and what Robinhood produced, which I will blame Robinhood for that. I mean, they should have just been better communicators to the analysts of how to think of their overall business. That was the issue. So we'll get October numbers next week for Robinhood. If those numbers are going to be pretty fantastic, I mean, Vlad said they're the best. It's one of the best months the company's put up in the history of them being a company. So you would imagine that month is going to be ready to give them a good Q4. If November follows with a decent month, then all they have to have is a strong December. And I think they're closer to 25 by the end of the year. So we'll see kind of what happens with Robinhood. But so far, streets kind of had it bottom out around that 2350 range. SoFi up another 1% of the pre-markets, 1127. SoFi holding very strong after the past couple of days. Meta up about 0.63%. Rocket Lab 1.3%. Root is up another 6%. And you got Lemonade right here up 1.22% as well. Where is Google in the pre-markets? Google is at 171. Google is flat in the pre-markets as well. PG Investments, thank you for the $10 super chat. What's up? Do you see why we write covered calls now? When Hood goes down, you take your unrealized loss. Covered calls bring in realized gains. You want cash flow coming into your account. Yeah, 100%. And TJ will be on the show today. We will be talking about covered calls and all that good stuff at around 10 a.m. or 10:15 when he joins for our option segment. Yeah, look, I mean, covered calls are important for that reason. I think that's what we talked about. But you have to, I think you have to understand the opposite direction that they go and the direction that they go when the stock goes down. If Robinhood was at 32, covered calls would seem horrible. At that moment, given your average, right? If you have an average of 28, it doesn't matter. If you have an average of 15, it does matter. If Robinhood falls to 23, like it did, covered calls seem amazing. So I think the philosophy of covered calls are very simple. It's a question of, are you correct on the direction of the stock? And you either will be correct or you either won't be correct. But the hedge of the covered call is the idea that you collect something, whether you're right or wrong. Whereas if you have no covered call, you're just totally wrong, right? And so if the stock goes down. So yeah, I think that's a definitely important move to hedge. With TJ and I's share, we have 10,000 shares of Robinhood. We had 50 covered calls at 26, and then we had 50 covered calls at 32. So both of those now, I think we'll be able to buy back and easily be able to collect that premium. So those worked out. But for the past couple of weeks, right, they weren't working out when Robinhood was at 28, and we had covered calls at 26 as well. Bay Ray says, don't write covered calls into earnings. Yeah, it's just a risk, you know. If people want to do it, that's fine. If you don't, then that's also fine. TJ is also the type of guy, you guys got to remember TJ's account. TJ is working with $9 million, and his goal is not to make the 9 million turn into 10 million by having stocks go up. It's by using those stocks as a tool to collect something out of them. So his philosophy, like I've talked to him for a couple months now, and like really, whenever I talk to him about strategies, his philosophy is hell-bent on this idea of these stocks need to pay me a premium for being here. And that's it. And sometimes you can get into a dicey situation when you get Palantir and you have this covered call at 12 or 30 and the stocks run up way too much. And like that's, you're missing out on a lot of money there. But if the goal is just, I need to get 2% a month or 3% a month off a big base, so 2% off of, a lot of money is still a decent chunk, even if it's only 2%. Then by hell or high water, that's going to be your philosophy, right? Whether it's puts or calls. So I also think really it's based on, is it for income or is it for hedging? And that also determines the philosophy on options as well when you engage in them. Sham Sanker. So did you guys see the pod? Hopefully that was a good surprise for you guys. Remember on the market close, we were listening to Sham Sanker talk, and I was just trying to keep a straight face, knowing that I have a podcast coming out with him later today. But I hope you guys enjoyed that one. It was a fun one, getting a lot of good feedback on it. I think you guys enjoyed. I'll just play the intro right here on the podcast itself, because I thought it was a decent intro. And then you guys can watch it whenever you guys want to do. I think Sham is just one of the smartest people ever. And I'll go into a little bit of details of what I think he's trying to do with his whole thesis that he published yesterday. Because I think there's a broader story with how he's trying to essentially lobby the American government to not be as weird as they are with government procurement.
You're going to have your good idea eating strawberries in Palo Alto. You're going to learn that on the factory floors of Detroit or in the fire cells of Djibouti. Why should you adopt commercial technologies that are cheaper and better when you are within your cost schedule performance? For all sorts of structural reasons, we've prevented the most innovative, creative aspects of American tech from really deeply penetrating the department. If it could have been solved through a requirements document, it would have been solved. The need to make better decisions quicker, that are more precise, more protective of civilians, has never been more clear. I actually think the companies want that world too, because it means that you can compete on quality. So much of this stuff was busy waiting. So much of this stuff is like some person didn't want to sign the paper on accreditations. We spent 20 years kind of building this wormhole between modern American software and the Defense Department. I can't tell you how hard it was. And what we need is not a defense industrial base, but an American industrial base.
All right. If you guys want to check that out, that's on the channel. But yeah, that was fun. That was super, super, super fun. It was really cool. So here's what I think Sham's doing right here with this 18 Theses defense reformation argument. I think Sham is single-handedly trying to intellectually change the mindset of how the DoD procures software. And he's not going to, change them overnight, but I think he's trying to get this message out there for the DoD to not be a monopsony. And I learned what a monopsony was as I was doing this podcast with him. And essentially it's where a monopoly has one seller of a product. A monopsony is one buyer of a product. So the government is the only buyer of a certain type of defense product. And there is a lack of competition in the sellers of the buyers of the product. There's tons of sellers, Lockheed Martin, Raytheon, Palantir, Northrop Grumman, etc. But there's not enough buyers. And that's because the government, as Sham says, kind of runs as a centralized planning organization. He calls the DoD communists. And he says that as a joke, but he also says it as a metaphor for the fact that everything's so centrally planned that there is not an ability to meaningfully procure software in a way that creates competition. And so I think over the next couple of years, as a Palantir shareholder, we want more and more government competition within the procurement sector from the buyer side to be able to enable the buyers to see that the best software should win, aka Palantir. And so what he's trying to do, in my opinion, is use the media to an extent to get the world to realize that this is an issue. This does matter. He's been talking about this for the better part of 2 years, but I think this new website that he published yesterday is trying to really take it seriously. And if he can get some of these high-level DoD officials to recognize the absurdity of government procurement, there should be more competition. There should be a better angle for Palantir to win more deals, and that ultimately should be good for shareholders. So I think that's kind of his core thesis. That's what he's going for. That's what he's trying to do. The question is going to be if he's going to be successful over the next 5 years with getting people to realize how important it is to buy software in a certain way. And if he is, then we're going to get some momentum, probably with more government deals. If he's not, then we're going to have to see how competition ultimately turns out inside of government procurement. But I thought it was a great interview. I thought it was fun. I tried to ask him questions that were meaningful. And again, he's just so filled with examples and ideas and thoughts and opinions. And so he can usually come up with some really good stuff. And he's a joy to listen to. So awesome stuff. Super, super cool. Andrew says, hi, Mitch, just joined the stream. Whoever wins next week's election, will stocks rise anyway? What is the uncertainty? So the uncertainty is a sweep of the Democratic of the election being all Democratic or being all Republican. So I think the market's primarily concerned of, hey, if the Republicans get the House, the Senate, and the White House, which is, if you're not from America, the House and the Senate kind of comprise Congress. The executive branch can't really do anything unless the House and the Senate also have a 2/3 majority of agreement on a certain policy or bill. Then that is going to dictate policy in America. If we look at the betting odds, by the way, things are getting tighter. So Trump was up, call it 68 to like 39 the other day. And now it has started to narrow the spread, 57-43. So you're starting to see people towards the end of the cycle, which we're coming up in the next 3 days, put some more bets on Kamala. And I think that's emblematic of the fact that I do think this is 50-50. It's still a coin flip. To me, Pennsylvania is going to really decide the winner. And if Trump loses Pennsylvania, it's going to be very hard to win the election. If he wins Pennsylvania, it's a lot easier. He has to just win one more state, and then he would win. So I think the street is concerned about, okay, what if Harris wins the House, the Senate, and the executive branch, and then you've got all Democrats? The idea that they could pass a income tax rate that is higher is possible. And the market definitely won't like that. Now, granted, when I really think about it, after the market gets like a week to digest the election news, is the stock market going down 15% because the Democrats win? I don't think so, dude. Is the stock market going up 15% because the Republicans? I don't think so either. I think it's a lot of hoopla. You deal with it. It happens. It'll be some jitters here and there. Maybe Bitcoin goes crazy up to or down. And then we go back to like, all right, so is Nvidia going to crush earnings? And that's it. So this is the way I'm thinking about it. I don't think it's going to be that big of a deal. It'll be exciting to cover to kind of see what happens. But in terms of the markets, I think the markets are more resilient and they can move forward regardless of who wins at the end of the day. Experimented, thank you for the $2 super chat. Kalshi users are 90% men, not accurate. That's actually a decent critique. I haven't heard that critique before. Kalshi users being 90% men, there's an argument that if men tend to lead a little bit more Republican, then that could be skewing the polls. That is kind of fair, dude. I like, there's a lot of these betting sites, a lot of this is a lot of men. I mean, sports betting is heavily dominated by men. So you would imagine that a lot of these websites already are dominated by men. And so you can make an argument. There's a lot of different ways. These are not the best methodologies. These are maybe better than polls, maybe not be better than polls, but it is a new form of a methodology that we have in the zeitgeist this year. And I imagine by 2028, it's going to get even crazier in regards to what the betting markets look like. Okay, let's get an update from Dan Niles on Amazon and Apple and get his perspective on what we got going on. And then we will keep going from there.
A founder and portfolio manager, and always like having you on, Dan. And I'm trying
very well, set a very high bar for the rest of the companies to report. Then Meta came out, had solid results, but they always guide conservatively in the September quarter for the out year. And the stock sold off, which is what we expected it to do. And Microsoft, the guidance was a problem like we expected. The forward numbers went down for the second quarter in a row. Azure in particular, which is their cloud business, the guidance was poor there. And so that stock got really hit pretty hard. And then you get to yesterday where Apple went ahead and in the most anticipated cut, they guided the December quarter revenues to low to mid-single digit growth. People are looking for 7%. So that obviously went down again. And then Amazon was the real surprise to me, where e-commerce guidance was actually pretty strong, even though you have one less weekend this year between Thanksgiving and Christmas for people to go shopping. That didn't seem to matter. Business is really good for them. Our two favorites coming out of this, it's the same two favorites that we had going in, which is Meta and Amazon through the rest of this year.
I don't think you met.
All right, so that was kind of his core takeaway. Ultimately, Amazon and Meta did the best. The other ones are kind of a little flat. Let's get a little bit more coverage on jobs. For those that were joining, we had a 12,000 jobs versus 100,000 jobs, which looks like it's really bad, but market's kind of priced in the hurricane, which is why it's not as bad as we thought.
Analysts, what people should be thinking with the stock market's reaction.
Well, investors expected this number to be more noise than signal because of the impact of strikes and storms. But the sweet spot for investors would have been a payrolls number of about 100,000. So what is this 12,000 telling us about the economy and markets? Well, first of all, I think it says that the September 250,000 payrolls was likely an anomaly. And we're back to that downward trend that concerned the Fed pre-September and cause the Fed to cut by 50 basis points in November. So first of all, I think it puts 25 for sure back on the table for the November Fed, probably another 25 for December. Fed may consider 50 for November if the next payroll number for November comes in light again. But I think markets are somewhat going to write this off and move on pretty quickly, because coming up, we have geopolitics with escalation in the Middle East potentially happening again. Also, earnings which have been mixed. We expected great earnings from tech stocks, but they have not delivered on an aggregate basis. And then, of course, the election next week. We don't even know when we'll have an answer to who is our next president. All of that is going to, I think, take front stage with this number, and this number will be written off because of those strikes and storms.
Fair point. In the meantime, Steve, how?
I think that's fair. Basically, she's saying coming up next on this crazy show that is America, we've got a lot of shit to figure out, including this election, which is why this number also is not going to be that big of a deal at the end of the day, given the market priced it in and given the market cares about nothing more now except the election. Money market funds came out yesterday, kind of a nothing burger as well. Again, the market is literally just waiting for this election result. So we have 2.2 billion that was decreased from the 6.5 trillion, and market didn't care. And they shouldn't care. I mean, this is a small number, but people definitely didn't decrease their money market fund outlooks before the election. They're probably waiting until after. And then if the election's good, in the context of what they think will happen to the market, we should probably see some decreases. And if we don't, then, you know, maybe that money market fund money is going to need more rate cuts to actually leave those funds. We have upgrades for Amazon. JP Morgan says 250, Goldman Sachs 240, Bank of America 230, up from 210. Deutsche Bank says 232 from 225, Jefferies 235 from 225, TD Cowen 240, Piper Sandler 225, Benchmark 215, Rosenblatt 236, Evercore 260, UBS 233, Cantor Fitzgerald 240. I mean, I don't see a 2 in front of Amazon yet, but all the analysts are very excited to give it a 2 at that handle. So maybe this is the day where things change. Maybe this is the day. This is basically like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, 15 upgrades. 15 upgrades across the board for Amazon. All of them overweight with a buy rating. None of these people even have a hold. Yeah, all of them have overweight, outperform, and buy. It feels like a no-brainer, dude. We should see 200. But now the market's got to see if we actually get there. People in the chat recommended Coinbase. Where's Coinbase right now? Coinbase got hit off their earnings. So the thing to understand about Coinbase earnings, guys, is that retail is not back in Bitcoin. And like, people need to understand this. Retail is not trading this asset. Retail cares more about Nvidia, Tesla, anything else other than Bitcoin. Robinhood's crypto numbers were disgusting, dude. 3.7 billion in volumes was almost similar to what they did in 2023 when like we were in a like pseudo bear market for crypto. So not good volumes. Coinbase had the same. Now Coinbase, what's funny is Coinbase said, hey, we're going to buy back $1 billion of our stock. Stock went down 8%. MicroStrategy said, we're going to dilute you by $20 billion of our stock, or by 10% of the company. And MicroStrategy went up 5%. So it's so funny. MicroStrategy's like, hey, we're going to dilute you. Market's like, great, we love it. Coinbase is like, hey, we're going to buy back our stock. Market's like, boo, you suck, which is just hilarious to see the dichotomy between them. But the point is the market's not happy because retail with Coinbase, because retail is just not coming back. Look at the ETF inflows or outflows yesterday. So Fidelity lost 75 million, Bitwise lost 74 million, ARK lost 94 million, and then the other ones lost about 50 million. BlackRock bought 318 million. For some reason, BlackRock always buys even when the rest of them sell. And a lot of times I'm thinking BlackRock is buying what these guys are selling in terms of the ETFs. Obviously, IBIT is more popular than a lot of the other ones, but still, BlackRock is the only thing, along with Mr. Michael Saylor himself, that is holding up Bitcoin, in my opinion. Because it's definitely not people like you or me in the chat that are actively trying to buy Bitcoin. It's just not the case. And it brings up the question: if the institutions weren't there, what would happen, right? If BlackRock did not start up its fund, would we have any level of euphoria around Bitcoin? Maybe not, dude. If BlackRock's the only thing pumping this thing every day, then maybe that wouldn't happen. So FOMO starts back up to 73,000. But we hit 73,000 though on Tuesday. We were at literally like $200 away from all-time highs, and there was no FOMO. Derek says those were my buys. Those were definitely Derek's buys on BlackRock. Just Philip and Derek, correct. Just Philip and Derek. Somish says Coinbase forward PE is 48, current PE is 30. Wouldn't be a buyer here for coin. Yeah, also you guys got to remember Coinbase was at $30 and it's at, I mean, now it's at 180, but at one point it was at 250. So Coinbase has had its run, you know, like Coinbase has had a phenomenal run over the past year, almost a 5x. But now it is contingent on Bitcoin. And again, Bitcoin also had a run. Bitcoin was at 15,000. Now it's at 70,000. So it kind of went up with Bitcoin. And there's a lot of alpha in the options on Coinbase. Same thing with MicroStrategy. But if I were to, okay, so here's the question. Let's put it in the chat. If you had to bet over the next 10 years, MicroStrategy or Coinbase, what would you pick? What would you pick? I think I think most of you guys will pick MicroStrategy. Let's do a poll. I think most of you guys will pick MicroStrategy. I'll give my answer in a second. Because on one, you're trusting the largest crypto exchange. On the other one, you are trusting Sailor. And I personally, all right, I'm doing the poll right now. I personally would trust. I would trust Sailor, dude. I believe in Sailor more than Brian Armstrong. I like Brian. He's smart. I think it makes sense. Coinbase is a good business. But at the end of the day, dude, they're just an exchange. Like, that's all they are. Like, you got Binance. You know, it was funny. CZ, the guy who went to jail, for the founder of Binance, he said in an interview yesterday he was in jail and the guards were asking him what coins they should buy. And he was like, I better not give them the wrong choice or else I'm screwed in jail right now. So that was kind of funny. But you got Binance, you got Robinhood, you got Bitstamp, you got all these other exchanges that are out there. I think Coinbase is the largest, but it is commoditized. MicroStrategy is one of the most unique strategies in the world, and it's a hell of a bet. But I feel like I trust Sailor more. All right, 70% of you say MicroStrategy over Coinbase. That's fair. That is fair. You know, MicroStrategy will keep buying Bitcoin. That's the thing. He will keep buying Bitcoin. Obviously, buying Bitcoin itself, as Derek says, is probably the better option. But if I had to pick, I would pick Sailor. I would pick Sailor. And the other thing is when you're buying MicroStrategy, you're basically buying Bitcoin to an extent. Now, I know you're paying a premium for that Bitcoin, but you are still buying Bitcoin, whereas Coinbase, you're not really buying. Does Coinbase even own Bitcoin, dude? I'm sure they have some Bitcoin on their balance sheet, but it's definitely not like MicroStrategy. They rely on people trading it. And so the alpha that they get from people trading it still has to result in revenues. Almost like the miners, dude. It's kind of annoying. The miners have to produce revenue. Coinbase has to produce literal revenue. Whereas MicroStrategy just sits back and lets Bitcoin go up and they just print money. Because if it goes up, then their market cap goes up. That's it. If it goes down, then they ship the bet as well. So it's a pretty asymmetric risk, but if it works, it works. And you know, that's ultimately the MicroStrategy thesis. Palantir right here, 41.91, up about 1% in the pre-market, which is nice to see. Okay, we got about 20 seconds going into the market open. Let's see how we end out today on a Friday. Kind of what goes up, what goes down, how things interact with each other. We got to look at SMCI. We got to look at Amazon. Let's do all eyes on Amazon to start off the show. And let's see if we can get through that $200 wall. Thank you, everybody, for being here. Friday, November 1st, 2 months left in the year. The stock market is now open. Wake your ass up. Here we go. $199 on Amazon. It is trying to break into the 200s. It's up 7%. You got some red candles right there, but it's fighting with the green. You really got a wall at 200, it seems like, that is not being allowed to be broken through. Let me get the resistance real quick for Amazon, and let's see what it looks like. Yeah, 198. 200 is just, it's just tough for Amazon, dude. 200, there are how many shares at 200? There are, I'll get the number right now. Where's this number? It's hiding from me. Okay, that's why it's 891,000. Yeah, someone needs 891,000 shares worth of Amazon to get through 200. So it's going to take a little second. All right, we'll get back to that. QQQ at 485, Intel at 23. They're up 7%. S&P 500 up about 0.47%. Bitcoin 70,219. NVIDIA up 2% on the day. That's nice for NVIDIA. Apple is down 2% on the day. Imagine those 891,000 shares are Bezos' shares just sitting at 200. A very specific number, 891,000. Maybe that is. Robinhood is red at 23.47. CleanSpark 10.63. That is down, or that is slightly up on the day. And Novix is slightly up on the day as well, up about 0.5%. PayPal 77.90. PayPal continues to go down as well. 1.72%. Reddit 113, down about 4% on the day. SoFi as well, down about 0.5%. Roblox had down 0.5%. We got DJT down about 4% on the day, given that his election odds in the betting markets are probably going down. Carnival Cruise is up 0.5%. Palantir 42.07. Palantir is green. Palantir earnings, by the way, is on Monday. Palantir earnings is on Monday. So Monday is going to be a very big deal to look at when it comes to Palantir. Again, it's the day before the election as well. Coinbase 180. MicroStrategy is up. Amazon is 8 cents away. You got 8 cents away from 200, 7.32%. You just got to get through 891,000 shares, which is not crazy. I mean, it's a lot, but again, it's not too crazy. Basically looking at $180 million to get through Amazon. But maybe there's a chance. Tesla, where's Tesla? Tesla's up 1.3. Tesla's up. Tesla is indeed up. There you go. Tesla 252. Again, Tesla was close to 270 on even Monday. So, I mean, all things are positive for Tesla right now in regards to their earnings growth. But we got to get markets to go higher for Tesla to go higher. Look at Amazon. It's 2 cents away from 200. Literally 2 cents away. 199.99. I know you Amazon shareholders are being real, are definitely a little pissed right here, saying it's not just busting through, but maybe we get through that. Maybe, yeah, there's definitely a real wall that's stopping it right there. Wow, dude. It's just like toying with 199.9. I think today's the day it gets through, dude. If it gets rejected right there, then that's like some serious kind of market maker reverse psychology going on with Amazon. All right, we'll get back to that in a second, unless it breaks through. Nope, it's getting hit. It's getting hit every single time. When it breaks through, it's going to break through aggressively, in my opinion. I don't think it's going to be too silent. Q's at 486. Intel's up. Intel's got a red candle. Look at Intel. Wow, Intel was up 13%. Intel is now up 3%. Intel's giving back a ton of their gains. Intel's giving back a ton of their gains. I think, yeah, the street's upset that Bezos will sell at 200. I think that's why they're not letting it get there. Nvidia at 135. That's up 2%. Robinhood basically flat on the day, 23.47, down about 0.09%. Microsoft is slightly green at 408. And Amazon is still fighting for 200. Amazon is still fighting for 200. It's really fighting, right? Like it's like seriously fighting. SoFi is... Why is SoFi down 2%? How did SoFi go below 11? I feel like that's all fintech maybe selling off a little bit, and SoFi's following. SoFi did get a couple of price target upgrades yesterday to 12 and 13. So SoFi, the street's warming up a little bit to SoFi. MicroStrategy's up about 1%. Bitcoin 70,451. Bitcoin getting a little bit more green, which is not bad. A Bitcoin run back to 71 and holding that for the weekend, which it's always tough over the weekend, but if that could happen, that would be great for Bitcoin. I mean, that would be super positive, but we got to see if we get there. Robinhood 23.25. All right, so this is the lowest we've seen, I think, since post earnings. If we get to the 22s, I'll be ready for it. I've got money waiting for the 22s, so let's see if we get there. But 23.24 right now on Robinhood. Robinhood's tanking. This is a fintech thing because Bitcoin's going up, but Robinhood's down. SoFi is also down 2%. I imagine PayPal has to be down right now. Yeah, PayPal's down almost 3%. All the financials are going down for some reason. Don't know why, but all the fintechs. Square is probably down right now. Square is barely up. Square is up 0.01%. So the financials are getting hit. Amazon here at 199.3. The street is not letting it touch 200. Not letting it touch 200. Yeah, I don't know why PayPal is getting hit. Let me see if there's any press release or something. That is weird. The 10-year, by the way, is at 4.273. So 10 years down a little bit on that jobs data we got. If you're just joining, the jobs data was 12,000 jobs added versus 100,000. I know that sounds crazy, but the street expected it because of the hurricane. So it wasn't that big of a surprise to the downside. S&P is 572. S&P is up 0.6%. Palantir is up 1.4%. Amazon not getting that $200 level, getting rejected at 199. And SoFi is below 11. Why are financials down? Honestly, I'm not sure. I'm trying to see right now if there's anything, but the jobs data, I don't think is bearish for financials because it means we're going to get rate cuts, which is good. I don't know. I'm trying to figure out, I can't really, I know Robinhood earnings weren't the best to the market, but that doesn't mean take SoFi down 2% with it or PayPal. especially because SoFi had a really good earnings. PayPal had a great earnings, even though the market didn't love PayPal's earnings either. But Robinhood 23.23. I don't know. IWM is up. Small caps are up. HIMS is up a little bit after being down 15% this week. CrowdStrike below 300. Dell at 125. Eli Lilly at 829. Carvana is down 1.4%. ARK did sell a ton of Palantir yesterday. She sold another, I think, 150,000 shares after selling 350,000 shares the day before. So 46.11 right here on ARK. She also sold 50,000 shares of Tesla yesterday as well. So continues to offload Tesla and Palantir. Tesla right here at 252 right now on the day. First day of November. Yeah, maybe that's the reason everything's selling off. First day of November. Now, November and December tend to be really good for the markets, but especially during an election year. But we got to get through the election first. So maybe that's another reason things are selling off. But it's weird because I don't think we can blame, the election is the reason things are selling, or fintech is selling off today when Tesla, Amazon, and Palantir are green. The Nasdaq's green, right? It's like if election was the reason for things to be selling off, then everything should be red or at least slightly green. But a lot of these are up 2-3%. Nvidia's up 1.7%. And look at Bitcoin. Nice green candle right there, up 2%. Bitcoin's trying to get back to 71. That's why MicroStrategy's up. Nope, MicroStrategy went down. All right, now everything's going down. Now, at least in the fintech space, crypto space. Coinbase is slightly green. That's weird for MicroStrategy. For Bitcoin to have that candle and then MicroStrategy gets hit. The market is open Tuesday. Yes, the market is totally open on the election day. Nothing changes with the market, up or down. So the election is not going to impact the actual opening of the market itself. S&P 500 at 572, which is nice to see that is up right now. Financials are doing great. Funds are taking profits on a Friday before the election. Makes sense. Yeah, I think that's fair. I think that's how you would describe it. Celsius has news. Where is Celsius? Is Celsius green? Celsius is up 1.25%. Let's see if I can find any news on Celsius. Celsius is green. Celsius Holdings acquires a key manufacturer of beverages for $75 million, acquiring a 170,000 square foot modern manufacturing warehouse facility in Charlotte, North Carolina. So it looks like they're expanding. The street's probably not upset that they're spending $75 million in cash for this because it's going to help them grow. So I guess that's why the street's happy about this. And $75 million is not that much money in the grand scheme of things. So there you go. That's the news on Celsius. They're getting a new manufacturing center to continue to grow. SoFi down about 2.28%. Tesla still up. Amazon is not getting past 200, at least not now. You got a red candle right there from 199.9, 198 now. Google is slightly green. Palantir is green. Bitcoin 77 or 70.7. Intel is giving up all of its gains. If you bought Intel's after hours yesterday, unfortunately, you are now down on that. And then Apple recovering a little bit. Apple was down 2%. Now Apple is down 1%. Very, very weird market. Is Amazon fintech or what? Nope. Amazon just has a dude who has a dream to buy his first Lamborghini. And that man's name is Jeff Bezos. And he needs to sell a decent amount of stock. Lamborghinis are expensive. So, he's got to take some off the table. At 200 now, there are still 907,000 shares. So when it went up from 891,000 to 907,000. So you're looking at $200 million has to be purchased of Amazon to get it out of here. Or at least to break through 200. How much is he planning on selling? I think it's $2 billion, but I think it goes up to $5 billion if I'm not wrong. But maybe it's 907,000 shares worth of Lamborghinis that he needs to get. Palantir earnings is on Monday, not on Tuesday. It's on Monday. And then Tuesday we have the election, and we'll see. Brandon, the way I see the amount of shares is that you have to order book flow. You can get it on Webull. I use Robinhood to get it. It's like $5 a month for their gold subscription, and that's when you see it. But yeah, a lot of services offer the ability to see like what the order book flow is, and it's not perfect because there's a lot of like dark pools and stuff like that, but it gives you some resemblance of what the walls look like. Derek says, call my partner Vlad to buy 1 million shares of Amazon to break the wall. The problem is, dude, here's the thing. If you buy Amazon at 200, like, do you get any more juice out of that? Or does it just go back to 198? Because I think a lot of people are going to be pissed off if they sell at 200 and then it just goes back to being good old Amazon and finds its way to its lovely home at 185, 179. Like, So buying a ton of Amazon right there at 200. It's also a little scary because Amazon has not been above 200. I mean, has Amazon ever, for a little bit? Amazon hit 200 in July when we had everything pumping at $201.20. That's it. So it held it for a day. So it has no experience with the 200s. And once it gets there, does it just bust through, or does it kind of get a little nervous and then just come right back down? I think that's what the street is afraid about as well. Microsoft is up 1%. CleanSpark's up 1%. NVIDIA's up 2%. Peloton is up 1%. And you got Hood at 23.24, down about 1%. MicroStrategy as well, down about 0.32% right now. Hi, Amit. What do you think about Estee Lauder? I wouldn't engage with this one. They're cutting the divvy and they're lowering their sales growth, and China is a headwind. So, I mean, personally, there's nothing that exciting with this one. So I'd stay away. I don't think the dip is that interesting. I know it's down a lot, and I get it looks attractive, but the fundamentals just aren't really there. I mean, a lot of times, dude, when something goes down a lot and like it looks really bad, it's bottom feeding if you get in because you hope there's going to be a recovery. But that means you have to really trust management and say there's going to be a recovery, right? And with Starbucks, I guess the street really trusts Brian Nichols because they think there's going to be a recovery. But with like Ulta Beauty or Nike, like the street doesn't fully trust there's going to be a recovery. And that's why those stocks haven't exploded the way Starbucks has, even though Starbucks was down like 30%. Bezos needs dry powder to buy the Celtics for the team. Yeah, for cash. Yeah, that's the other reason Bezos is thinking of selling a lot of Amazon, because there was a New York Post article about 2 months ago that came out that said he wants to buy the Celtics for $6 billion. The Celtics did win the championship last year. So also the Celtics are one of the most storied franchises in the NBA. So if you need $6 billion in cash to buy them, then you're looking at a decent amount of Amazon stock being offloaded as well. What else? Go over the Boeing news. Oh yeah. So what Boeing is actually up today. Boeing's up 1.6%. Let me pull up the headline. I saw that for a little bit. But there's something that got the street excited about Boeing today. Boeing reached a tentative agreement with its machinists union to end a strike that has severely impacted production. The company increased its wage proposal to a 38% raise over 4 years from a previously rejected 25%. That's why Boeing's up 2% right now. I don't think that's enough to get super excited about Boeing, but that is a reason why Boeing is doing better. So now you got a strike, and that should be good for jobs as well. Once that strike comes to an end, which it seems like today it's coming to an end. Hood looking to test 23, it looks like. Are we going below 23? What are we looking at? Hood 23.18. Yeah, I mean, look, if we get there, I'll be waiting. That won't be that hard of a dip for me to buy, but let's see if it can actually get there. Nike at 77, Amazon at 198, Starbucks at 98, and you got Celsius right here at $30.40 on the day as we are green. All right, let's see what other headlines we got going on and anything else changing currently in these markets. Not too many crazy big headlines. What companies had earnings today? Let's see. Companies today. Oh, we had ExxonMobil and Chevron. So we had those results. ExxonMobil, they missed on revenue, 90 versus 93. So missed by 4%. EPS 192 versus 188. So that's a miss. Chevron beat on revenue by 3%, 50 versus 48. Beat on EPS 251 versus 243 by 3%. So let's look at those stocks. Exxon is up 1.3. Chevron is up 4. That's nice to see, even with oil prices being down so much. And that's actually a good thing, because oil prices being down, it's tough for these stocks, but they probably got oversold as oil prices came down, which is why they're getting a little bit of momentum right now. Why is fintech dumping? Investigate. Honestly, dude, if anyone has any theories, let me know. Let me look up some stuff right here, see if I can find any news. I don't know, because it's all of them at once. All of them at once. Let me go to the fintech list I have. All of them at once. Outside of Square and Coinbase that are kind of holding up. PayPal's down 3%. Robin is down 1.6%. SoFi down. Wow, SoFi 1083. SoFi is getting hit on the head right here. And then Affirm is also down 3.6%. I don't know, dude. I'm not sure. Average man is running out of money. It's the non-farm street thinks that people don't have money. I guess that could hurt fintech, right? If people don't have money, a lot of these fintechs are based on deposits and transaction volumes and yada yada. So if people don't have money, but people do have money. I mean, based on what we're seeing in Q3 earnings, right? And again, the jobs report is skewed because of the hurricane. So that could be an impact for fintech. I don't know if that's like the reason you could say fintech is bad, especially all three of them put up amazing numbers on their earnings. So defaults on loans. Yeah, but the thing about SoFi is their defaults and delinquencies peaked in March, and it has not gone up since then. So if there was anything concerning in the earnings report around defaults or delinquencies, the market would have seen it and appropriately priced, the risk that came in from that. Unless the market's thinking we're going to get a lot more defaults and delinquencies in the next 5 months, which then I guess is a different question. But not sure how the market's thinking of it like that. Where's TMDX? Is TMDX down again today? Transmedics? No, they're up 3%. The reason they dropped was on earnings. They dropped 30% on earnings. They missed on their revenues and EPS pretty badly. Still a decent company. I don't know if it's a buy the dip, but that's up 30%. But the big drop was because of their earnings numbers. Maybe they're using it as an excuse to buy. Maybe that could be happening. People don't have money. They have credit. They have credit and debt. Yeah, look, that's fair as well. I mean, I still think in 2025 we're going to see if the credit card bubble actually is a bubble, in terms of how much money people have or they don't have that they're using to buy this stuff. But the personal savings rate did go up. It was revised higher, if you believe that. It did go from like 2% to 5%, which shows that people do have some money. Amazon trying to test 200 again at 199.4. Up 6.3%. Robin making a little recovery right here. Some green candles at 23.30. A lot of this also is probably just it's a Friday and, people want to take profits and they're choosing fintech to take their profits from. Because if SoFi gets back to 9, if Robin gets back to 22, I mean, these are just stupid prices for these companies, in my opinion. So I don't know if that dip lasts for too long. S&P, look at that. Up almost 1%. S&P is getting back pretty much everything it lost yesterday. That's incredible. So fintech's dumping. Big tech is stale outside of Amazon. Pound turns up a little bit. And the S&P is choosing to go higher, which means, is the Dow up today? Is the Dow Jones up today? The Dow Jones is up. Maybe that's helping the S&P. And then small caps are probably also helping a little bit of the S&P. Up about 1%. TNA should be leveraged higher. Yeah, TNA is up 3%, given IWM is up as well. What else do we see? Oh, we just got, no, this was this morning, right? S&P Global Manufacturing PMI final. Let me pull that up right now. Do we get something at 10 a.m.? Let's see. What do we get at 10 a.m.? At 10 a.m., we get ISM Manufacturing. So in 11 minutes, we'll get that number. Global Manufacturing, that came out 15 minutes ago, or that came out 4 minutes ago. 48.5 versus 47.8. So that's higher. Oh, that's probably why the S&P is up. Okay, so S&P Global Manufacturing PMI came in at 48.5, which is a read on manufacturing, versus 47.8, which is good. That's probably why the S&P is up right now, even though everything else is being a little wonky. That's a good number. That's not a bad number. And now ISM Manufacturing, which is a little bit more of an important number, that one we're projecting at 47.7, 47.5. That number in 11 minutes will give us some details as well on this. Bayray is not selling his Amazon calls. We are breaking the wall at 200. Dude, it is so funny, bro, because there's so many, especially on Twitter, there's so many bulls on Amazon. Like, people just love this company, which for a good reason, right? But all of them have just been unilaterally just waiting for this $200 to get through. And as of now, it's not getting there. Will the 10 a.m. number move the market? Yes. I mean, so it depends on the type of beat or miss, because usually it has some impact, but it's in a range between 2 to 3%. It's kind of flat. If that number is way better than expected or way lower than expected, yes, it will move the market. That number will definitely move the market. But if it's a basic number within the range, then it's not going to get any love. Nvidia is 135. Nvidia up 2%. I think Nvidia is up because Amazon said they're spending CapEx. They're ignoring the SMCI risk right now. SMCI, wow, it's down another 6%. That means this week, SMCI over the past 5 days is down 43%. Went from 49 to now 27. Over the past month, it's down 32%. 6 months down 63%. Year to date, it's officially down 5%. Over the past 5 years, it's still up 1,200%. But in the past year, it has basically gone down now. Oklo's up another 7%. Wow. That's also really weird. Oklo, 24.13. Look at that. Oklo up 7.1%. It did hit 28 a couple days ago. And now it's at 27. Amazon trying to make another run again. 199.5. Maybe third time's the charm here of trying to get there. Volume is 25 million shares on Amazon so far. Decent amount of volume on Amazon. Rocket Lab's up 5%. Rocket Lab getting some love right here, up 5%. Again, a lot of these stocks have been very resilient. So when they've come down, they've kind of just stayed there for a couple of days and then they just shoot back up, which is something like Rocket Lab over the past week. SMCI down about 7% as well. Now officially going down. Robinhood down about 1%. SoFi making a little bit of a comeback. SoFi, yep, there you go. SoFi back to 11. Same thing with Robinhood. So all the fintechs now making a little bit of a green candle comeback right there. Same thing with PayPal, 76.75. But they did get sold off for the home builders as well are up today, up 1%. ITB's up 1%. Open Doors up 1.43. Ford is up 1%. JetBlue and the airlines are up today about 2%. Wingstop had a nasty. Did they have a bad fall this week? Yeah, they were at 303. Yeah, they did have a fall. So they went from 303 to like 287, a little bit of a rebound to 292 right now. Their earnings missed on guidance, but still their stock was up a lot this year, so it wasn't too bad. Nvidia 136 and Amazon 199.68, about 40 cents away from 200. Barry says, I'll buy Amazon Prime if we break 200. I'm pretty sure everyone in this chat here has Amazon Prime, right? If you live in the United States, I'm pretty sure everyone has Amazon Prime, dude. If you have a primary residence, I feel like you have to have Amazon Prime. It's just part of the American ecosystem at this point. All right, we're 25 cents away, 20 cents away. Let's see. Maybe we break through it. I don't watch Prime Video, but I don't watch any Prime content, but I feel like just for ordering stuff, people have Amazon Prime. We have Prime in the UK. My wife spending alone will take Amazon above 200. Bro, I feel you, dude. I mean, my mom, there's a new package every other day with my mom with Amazon. Like, she just loves shopping on it, dude. It's an enjoyable experience for women to shop on. Immediately, they can just get whatever they want in a couple clicks. But it's dangerous, dude, when you have one-click shopping. NFL on Thursday nights is Prime. Yeah, that's another reason they're dishing out a ton of money to the NFL for Prime as well. Everyone tells me to watch The Boys. I just don't have the attention span ever to watch The Boys or to watch any show. But it's probably a good idea to watch it. All right, I don't know if we're getting above 200. It's like watching paint dry at this point with Amazon. I don't know. I don't think it's happening. S&P at 573, IWM at 220. You got Amazon right here at 199.69. All right, let me bring on one of our favorite guests on the show, and we will start our segment. And if Amazon does get to 200, we will show you guys. This is in the public portfolio as well for TJ and I, so we'll be talking about Amazon, and we'll be discussing it, going deeper, and seeing what we've got going on for Amazon. The Boys is so good. Yes, you would have the attention span for it. What is The Boys about? Hold on real quick. The Boys, Amazon. The Boys is an irreverent take on what happens when superheroes who are popular as celebrities and influential as politicians are revered as gods. But what happens when they're using their powers for good? Okay. Interesting. I don't think it's gonna be better than Dawson's Creek, but nonetheless, I guess we'll give it a chance for superheroes. Why do people love superheroes so much, dude? I've never been into the whole Marvel universe. Like, it's superheroes. It's not the. All right, I'll give it a shot this weekend. I'll try to give it 10 minutes and see if I can stay for the full hour. We'll see. All right, folks, let's bring on one of our favorite guests on the channel, Mr. TJ the Wheel Deal. TJ, what's up?
What's up? How are you guys?
I'm doing good. How are you doing, sir?
Doing well. Shout out to Matt Flo. He hooked me up with the beanie.
You finally got the beanie. You finally got a hat.
So if I can stay in the portfolio for a little longer.
It was so funny. I think I saw your tweet a couple weeks ago. You were like, if I don't get a hat, I'm selling everything at $9. And then one of the guys was like, damn it, just give me your address. I'm going to send you the hat.
Yeah, I don't want that downward selling pressure, baby.
Well, with SoFi's volume, 150,000 shares might not even do anything.
I was serious too, because at these levels that where Riot was at, I would rather own Riot because I see more alpha because of the premiums as well. So I was just like, y'all think that I'm playing, but I'm not really being fun. I'm being funny, but not really. Because I think I'll make a lot more money even if Riot goes sideways with all the fucking premiums. By the time SoFi gets to 13 or 14, 4 cycles of premiums on Riot, and I'm not.
Yeah, but you're a little emotional with SoFi. You want to keep your SoFi. You don't want to get rid of SoFi.
A little. I have the leaps, so I wasn't going to sell the leaps.
That's true.
Anyway, how's everything going, man? All good? How's the week going?
Well, the week is okay. The week was great until yesterday or 2 days ago when we had one of the bigger positions that I have go down 20%. But it is what it is. This is the nature of the market. This is what you got to deal with.
You don't say. Are you talking about Robinhood?
I'm talking about Mr. Hood of the Robins. That is.
I wish we were at that level to where we could roll the tape on how you are just like on Vlad's balls and you don't want to sell any covered calls. This thing's going to 45.
Yeah, the covered calls ended up working out for this one. But, it was surprising because, I mean, you saw the results. Numbers were incredible. It's just the analyst expectations. It was a mismatch, and that fucked the stock. Yeah, and it happens.
That's the market that we're in, where you can have a 36% CAGR, and they look at it like it's a disappointment.
Which is the brutality of this is why this game is so hard. This is why people that make money in the markets get so much respect, because this game is so fucking hard.
Yeah.
No, it's a good point. All right,
anyway,
so
let's talk about it.
Yeah, let's get into it. Go ahead. You can start. Yep.
So we got 21.17 for the average cost. And we're up a little bit on the share, so that part's good. It's a decent size in the portfolio, not great. It's not anything that's going to move the needle in either direction, unless we were to get assigned an additional $245,000 via cash secured puts, and that's what we're looking at right now, right? We've got 50 cash secured puts at 25, 50 cash secured puts at 24, and then our saving grace is the covered calls. We've got the 50 covered calls at 32. 50 covered calls at 26, all expiring on 11/15. So in a couple of weeks, bro, it's D-Day with Robinhood. So what do you want to do? Talk us through.
So I think first let's do the 32 covered call. We're up 95% on that. I think we get rid of that and we write a new set of covered calls instead. I think that makes sense.
Okay, so you're going to buy to close. It's 50 contracts, right?
Yeah. So for those, just explaining what we're doing here, we have covered calls on Hood. That means we're betting Hood would not be above 32 by 11/15. Now that Hood tanked after earnings, the market is pretty much agreeing it's not going to be 32. So we are giving back $250 of premium and we are receiving $2,900 of premium.
Yeah.
And that frees up 5,000 shares, 50 contracts, 100 shares a contract to then write new covered calls if we want to at a different strike.
Right. So we're waiting. We've got it there. We're willing to give 5 cents a contract. We could close it out for an additional penny right now. But we can also be patient because there's no risk of these shares getting called away. So whenever there's no risk of these shares getting called away, you don't have to be in that much of a hurry to give back premium.
Agreed.
Because it's kind of like, we'll do it, but on our terms, if that makes sense.
Right.
So what do you think about these right here? These aren't causing any stress, by the way, just so y'all know where I'm at emotionally. Like buying Robinhood at 25, like let's say we had to go to sleep and couldn't do anything. Like our hands are tied and we had to let this contract play out. I'm cool either way. We either own the shares at 25 or we don't. And that's the place that I would like for you guys to strive to be, is that you're pretty indifferent because you're like, okay, I don't feel like I'm getting a great deal, but I'm getting a good enough deal. And I feel like I did get paid premiums to get into this position. And I'm going to get premiums to try to get out of this position. So it says 25, but I feel like we would really be owning those shares at like 23 or 23.50 once you add up all the premiums on this particular position.
Right.
So it's not really, if a position is giving you the heebie-jeebies whenever it's going against you, then that's a real good indicator for you that maybe you're not that bullish on the stock. You're only bullish on the stock when it doesn't look like you have to buy any more shares. But if it looks like you got to buy more shares and now all of a sudden your blood pressure is going up and all of these other things, then that's probably a real good time to go do some more homework and figure out, why am I feeling this way? Why is price action causing me these types of emotions that aren't so positive? Because you should legit admit, and I'm like serious right now, you should legit feel excited when a cash secured put, when shares are supposed to get assigned to you via cash secured put, because you literally got paid to buy those at a discount in relation to the prices when you sold that cash secured put.
I agree.
So how do you feel about Robinhood? What do you want to do? We don't have to do anything right now. First of all, I mean, it is that 23.66 is our break even. So it's a little bit below our break even. The math says we should probably roll. But at the same time, if we're okay with assignment, we really don't have to do anything.
Yeah, I think, well, post-election, I think Robinhood is probably, in my opinion, above 25, given we get another rate cutting cycle. So I think we wait at least until next week. If we're not, then yeah, I'm happy to buy shares at 23.66 on that cost basis. So we kind of don't have to do anything here, and we just wait it out.
I agree. So I think the only play here is really just waiting, and then also seeing if these covered calls get, you see, because here's like these things right here are only worth 4 cents now. So we had, well, maybe these got exercised already. Yeah, you see, so these got, so we're good. So we don't have any more covered calls at 32.
So yeah, and I guess writing new covered calls today not the best day because it's red. So maybe wait till a green day. And,
yeah. So writing covered calls is twofold though. One is you want to maximize the premium. So ideal scenarios is sell covered calls on really, really green days, preferably when the stock is a little bit overbought, like a 70 RSI or something like that, because you feel like it can't really go that much higher. So you want to get as much premium as you can. And then you're also putting a strike price that is at levels that if you had to sell the shares, it's whatever, because you made a lot of money.
Right.
That's the ideal scenario. There's also another function of covered calls saying, hey, this thing could potentially go down. So let me hedge a little bit of the downside and let me just bring some more premium through the door to lower the adjusted cost basis of the entire position. So it's almost like, to me, it's a semi-bearish strategy when you feel like the stock can't go up, regardless of whether or not the conditions are ideal to maximize the premiums. So it's kind of like, okay, well, this thing tanks to 20, then now I really can't sell covered calls for a long time, because one, I'm below my cost basis, and two, the premiums that are coming through the door are pretty shitty. So oftentimes I sell another round of covered calls just so that I can maximize any premiums that I can get, knowing that I can manage those covered calls the same way that I can manage a cash secured put. So I call it a setup trade. I'm going to talk about this on Wheeler's seminar tomorrow. Is if I waited for absolutely ideal conditions to sell cash secured puts and covered calls, I would have so much money on the sidelines all the time. I would have a lot of shares that aren't bringing in any revenue. Right. So what I do is I will sell the cash secured put as a setup trade, or I'll sell the covered call as a setup trade. And if the conditions become more favorable, then I'll fix it with the roll to get my desired strike price.
Right.
But it's more work, right? It's more managing and all that stuff. But it's also
here's a question I have on the covered calls of managing them. What is your philosophy? If you can give a couple of like 3 or 4 ideals on how you manage a covered call that goes wrong, or what you do when a covered call is about to go wrong and you want to stop it from going wrong.
Yeah. So the very, very easiest way to fix the covered call is just to take your medicine and buy to close immediately. Because then it's just the first loss is usually the one that doesn't cut the deepest, right? Like, not to sound like one of those cheesy pop songs, but what I'm saying is usually your first loss is the smallest. So with rolling, you could potentially be digging yourself a bigger and bigger hole down the road. And because this position isn't really set up properly yet, and that's what I wanted to talk to you about. I want to spend a little time on this segment because Robinhood can teach us all a lot right now.
Yeah.
Is I would like to set this position up the way that I have the SoFi position. So we can look at the SoFi position real quickly. I think that this is an opportune time after a pretty massive dip on what I feel were really, really good numbers, the legend and all that stuff. The legend's not for me, but it's for a lot of you guys. Yeah. I'm just not. I'm technically challenged. You know, like anytime you put new technology in front of me, the first thing is I don't like it. You remember when you were trying to help me with StreamYard, bro? It was comical offline, right? Like I was having a real, what do you mean present screen? I mean, like I get angry at new technology. Like I just want everything to be voice activated, you know, like I want to be able to just tell the damn computer what to do.
Right.
So I think that Robinhood's got a lot of good things going for them. And I think that ultimately the trajectory is going to be up and to the right. So another thing that we can do that keeps us in the game with covered calls is we can do what I call my little wraparound strategy. We're already strangling the stock. We own the shares. We're selling covered calls. We're selling cash secured puts. So we are absolutely 100% certain that we're going to win one side of that trade at all times. And we'll manage the other side, right? But the one thing that can protect us on covered calls is that we bought some leaps as well, because then now we have the freedom to sell covered calls because we're not going to feel that pressure. Because if this thing goes on, if this thing goes on a massive run, well, our leaps are going to be printing anyway while we're managing the covered calls.
So this is important. I want to highlight this because I think this is a really good strategy, and this is what you've done with SoFi. Basically, you're saying, hey, you have 10,000 shares of XYZ stock.
Yeah.
Writing a covered call on 10% higher than your average might suck if the stock goes up 30%. But if you have a bunch of leaps that tend to print if they're out of the money and when a stock goes higher, even if they're in the money, they tend to naturally outperform the stock movement itself. Then even if those shares get called away, you still get to capture a lot of the upside with the leap, which is reducing the psychological and emotional barrier people have with the stock, essentially.
Yes, because the way that I look at my shares is they're virtual pieces of real estate. Did you ever play Monopoly as a kid or no?
Yeah.
So the idea is you land on Park Place or Boardwalk and you want to buy that little section, right, of real estate. It's the most prime piece of real estate on the Monopoly board, right? And then you land on it again and you're able to put houses if you have the money. Then you land on it again, you're able to put a hotel. And then anytime anybody else lands, they got to pay you rent.
Right.
So I'm like, if I spent all this money on these damn shares, I got to make sure that anytime anybody lands there, I got to collect premiums coming through the door. That's the name of the game that I'm playing. It's virtual real estate. Because these pieces of real estate are bought and paid for. You can't finance these. In real estate, it's a little bit different because I can control $1 million of property for probably $100,000, $200,000 out of pocket. Here, unless you're buying long calls, you can't do that. And even then, it's about 30 to 40 cents on the dollar, not 20 like it is on real estate. And the tax advantages aren't as great either in the stock market versus real estate.
Right.
Because all of those rules were made by billionaire people that more so are in real estate than in the stock market. So it's just so much more tax advantageous to be in real estate versus the stock market. Because you can write off a lot of shit, bro. It's crazy. But then whenever you sell it, I'm going to command higher prices, but I didn't pay taxes on those higher prices the whole time. That's why a lot of people hate Donald Trump, and he's probably getting sued all over the damn place with the way he did real estate over the years. So that being said, I'm like, if I paid for these shares, they got to bring some money through the door, because my overall objective, and I'll talk a lot more about this on the seminar tomorrow, is got $1 million portfolio. My objective is crystal clear. In 1 year's time, whether it's cash secured puts, cover calls, rolling, I need to bring in $250,000 for the year.
Right.
That is my job. That is my objective. That's the only thing that I can control. The stocks go up, down, or sideways, I can't do anything there. You don't control any price action in the stock market, but I control my positioning, and you do kind of control the amount of premium that you choose to bring in.
Yeah, and I think that's important, because when you're objectively crystal clear on what the hell you're doing, then you can also be a little bit more unemotional, right?
Yeah.
Because you don't care what happens at that point.
I'm going to show this. I don't normally show this right here, but let me show this for you guys right here. This is the way that I look at my portfolio on a daily basis. Can we zoom in?
Can we zoom in, TJ?
Yeah, let me just, does this help or no?
Yeah, that's perfect. Can you do a little bit more? That's perfect. Yeah, there you go. That's good.
Is that good?
Yep, you're good.
Okay. So I have it set up. I've got credits. I've got debits. I got leaps costs. I got leaps value. This is not the wheel tracker. This is TJ's this is a game of credits and debits, keeping it real simple, right? Then I've got the unrealized P&L on the leaps. I've got the share costs, the share value, and I get this information from the tracker. Then that's going to give me another unrealized P&L, number 2. And then I got the Bitcoin cost and the Bitcoin value, and that's going to give me an unrealized P&L 3, right? Because these are 3 different segments, right? You buy leaps, you buy shares, you buy the Bitcoin. So these things cost money and they're worth money. So that's how that happens. And here, these are every transaction that I've done for year 2022. It's just a game of credits and debits. But do you notice the one thing that is missing intentionally, Amit?
No, what's missing?
What would be the one thing that I could add here that could potentially make me emotional about everything that I do?
Oh, the ticker, right?
The ticker, right?
Yeah.
I don't give a shit. I need money to come through the door. So the only thing that I track on this tracker, this is called the portfolio snapshot, is my credits, the debits, the leaps cost, the leaps value, the unrealized P&L, the share cost, the share value, unrealized P&L there, the Bitcoin cost, the Bitcoin value, unrealized P&L there. Then I go to row 700 because I told myself I shouldn't do that many trades. If not, I'm over trading. So I'm getting kind of close on the credit side. I'm just saying, I'm getting a little bit closer than I didn't even think I was, I mean, I'm running out of real estate. You know what I mean?
So every single credit you get, no matter what it is, you record it right there. Gotcha.
Right. So I brought in $4.1 million, giving back $3 million. So it's like, shit, you're not capturing a lot of premium, right? Because collecting premium is easy. Capturing premium is a whole different game. Well, it's because from here I have to deduct the 1.1 that I paid for the leaps. Now the leaps happen to be worth 1.6. So I made 504,000 there. And then the shares, cost this much and they're worth that much. So that part's good. And then I freaking paid 62,000 for a Bitcoin because I just thought it was a good idea. I can't even sell calls on it, but it's worth 71. So that part's good. And this is the one I look at every day. I'm like, when am I going to sell that Bitcoin? Because I can't break any money through the door. And then I have the open options collateral in the money value, brokerage cash. And if I need to make a withdrawal, this is what Robinhood says I can pull out right now. Or this was as of like last week or whatever on this part on the bottom. I don't do this one all the time. That's why it's on yellow. I do that one like once a month or so. So that is what I track to keep me unemotional. So then I'm like, okay, cool. So there's been $6 million in deposits into this account. And I had about less than 4 million going into this year. And then there was, 2 or 3 million or so, whatever it was in deposits. But I've managed to bring in $4 million in credits. So whenever I can tighten up the screws over here and not give so much money back, I'm in a situation where I can make a shitload of money if I just stick with this strategy and the stock market doesn't take on my ass.
Right.
So there's that, but it's unemotional because I don't have any tickers. But then now I look at the freaking wheel tracker over here and it's a little bit different because I got all of these tickers.
Yeah.
So I can look at the summary page and I'll try to make this a little bigger for us as well. I'll look at the summary page and now this thing has tickers. Amazon's got tickers and it tells me it's made me 152,000 and tells lost us 72,000 right now unrealized. CleanSpark's made 293,000. I don't know if you guys can see that if I'm doing a good enough job of sharing it.
Yeah, we see it.
In phase, we're still negative at the end of the day, 143,000. TSL's brought in a cool 415,000. Your beloved hood at 83,000. VITX at 125 to the good. SoFi is good for 500,000 and so on and so forth. And it all looks good at the end of the day, but it could also mess with your emotions because the game is hard enough. The game for me is to get 25% coming through the door. And that sticks per year. But what if I said, well, I need to get an X amount out of Amazon come hell or high water. I got to get an X amount of CleanSpark, an X amount out of Hood, an X amount out of SoFi. I mean, my God, I just made a hard game nearly impossible because I got emotional with it. And I was like, hey, this hamburger stand needs to sell a certain amount of hamburgers, a certain amount of hot dogs, a certain amount of this. I'm like, dude, why don't you just worry about bringing all the fucking revenue through the door? And at the very end, you'll do the books. And then you're just going to keep the items that bring you in the most money and get rid of the ones that aren't making you any money. That's the way a successful hamburger stand would be run, right? Or a restaurant.
No, I think that makes a lot of sense, because essentially you're saying if someone is trying to wheel options for a living, which I know a lot of people in the chat are trying to do, at least to get them side income and eventually graduate to your level, then it requires a psychological approach that is, I'm going to bring in the hamburgers and hot dogs. I'm not going to care about which hamburgers or hot dogs I get at the end of the day.
Yeah, and then you're going to sit back and you're going to do all of the accounting, and then the numbers will guide you on the next phase of the business.
Yeah. Yeah.
Because dude, if I'm headstrong on being in on a stock, but dude, it's just not performing, you got to take you got to take that into consideration, because that is legitimate opportunity cost. Like everybody talks about these fancy terms, opportunity cost. What is it? The cost foregone because a particular decision was chosen, right? You probably learned that at Rutgers too. They taught that to me at UT Austin, right? Yep. So I have a lot of other decisions that I made. So now I can really compare apples to apples, not apples to oranges. And I could be like, dude, if all of this money was over here, because I think Hood's going up and to the right, does it stand to reason that maybe I should shave Riot, that I should shave the SoFis of the world if I'm more bullish? And then the numbers are going to kind of tell me what I could accurately predict and project. Right. Treat this like a business. You know what I mean? If you're selling hamburgers and hot dogs and pizza at the very end of the year, bro, you should be able to look and be like, okay, but this is how much I sold in hot dogs and hamburgers. This is what it brought in. This is what the profit was, etc. How am I with the vendors? I mean, you're going to be looking at all of these sorts of things, right?
And if people want more hot dogs, you sell more hot dogs. If Robinhood's doing better, if Riot's doing better,
well, that's what they want. You got to give people what they want, right? If you're in that business. Well, for me, I need to bring in about 35% in premiums per year so that I can keep 25. So I can't just sell cash secured puts on AT&T, because it's just not, that hamburger stand is not designed to give me that type of yield.
Yeah. Yeah.
You know, so you gotta figure out what business that you're in, and then you gotta mind your business accordingly, manage your business accordingly. Hopefully it helps you guys out a little bit. I'm not trying to like really get off track here or anything, but this is, I feel like sometimes y'all can't really relate to the moves that I'm making because you don't understand how I run my little hamburger stand.
No, I think this is very important, especially on weeks like this where big positions move 20% up or down. SoFi had a big move last week, or actually this week on Monday they had earnings. It's like a lot of times it's based on how emotional are you or are you not around a certain object. And like all of us are emotional about Palantir, but at the end of the day, if you're in your line of business, you don't care if Palantir has gone from the portfolio if it brought in the premium that it was needed to buy in, and then you find the next Palantir to get you more premium, right?
Right. Can you pull this comment up by Austin Harrison? That's a real good point. So I just want to give him another counterpoint, if you will. Not arguing with him because he's making some sense here. It was a little bit higher. It was like selling covered calls is a way to make sure you never hit a 10x on a stock.
Okay. You can respond. I'll find the comment.
Okay. So kind of true, not entirely true, because if you're playing the position correctly, you should also have some leaps, and those leaps can certainly give you that 10x if that is what your heart desires. Cover calls are a way to bring in some static income, some static revenue, a manufactured dividend on steroids that you otherwise will not be qualified for. Owning shares and not collecting any premium when this is your only source of income, there's levels of stupid I can't even fathom or comprehend how dumb that would be. And that is what I do. So again, you got to look at where is this person at that is selling cash secure puts and cover calls in their journey, in their career? Is this their only source of income? Is it not the only source of income? Am I sitting on a 6-figure salary somewhere else? Do I have a cushy retirement coming from the military? Or whatever the case may be. Like, that's why investing is so personal, and you got to run the hamburger stand according to your wants, needs, and desires and goals. So that's why I don't want to get in a situation where I'm going to be your coach and I don't have these hard, fast rules of when it's a 30 RSI, I sell a cash secure put. When it's a 70 RSI, I sell a covered call and all this other crazy shit. That's cool, but you can't do that kind of blanket trading, because not everybody's situation is so unique to them.
Yeah. Also, I don't think the goal has to be a 10x. You know, like
that's what you're trying to accomplish.
All right. If you can just get like a 2x in a year, I mean, that's still amazing, right? So a 10x is a 10x over time. But yeah,
so let's get back on track with Robinhood. I think that today it's a good day to maybe buy those leaps. By the way, those 32s are off. So now we have those shares that are unencumbered. They're free to run. So we're qualified for our 10X, if you will, right? But another way, and I'm not throwing shade on this guy, he makes a valid point. He makes a valid
no,
point.
it's a very valid point.
There's another, but there's always another side to the coin, is what I'm saying. Like we're not dealing with double-headed coins here or double tails coins. Like there's always
also it's different personal. If someone wants to get a 10X on Palantir versus someone wants to get a crap ton of premium from Palantir, those are two different strategies. That's it. You know, that's totally okay.
Agreed. So
okay, so what strike are you thinking if you want to buy leaps? So we would want to buy leaps because it's red today and it's red for the whole week. So the leap should be underpriced theoretically.
So my strategy for buying leaps is that I can control shares with the fraction of the money that it takes to buy the shares outright. And my sweet spot's usually right in here, about a year and a half. Over here, these leaps are going to be a lot more expensive. So I'm like, okay, I would like to own some more shares of Robinhood, but I'd like to own them in this $17 to $20 range.
Yeah.
So I want to buy them in the money, but I don't necessarily have to buy them super deep in the money. I'm looking for about an 80 delta. So that's a 73 delta. This one's probably going to be an 80 delta. So it's right in here. So I'm like, okay, cool. Instead of buying 100 shares right now for $2,300, I could control 100 shares for $790. So it's not as capital intensive. And also this gives me all the upside. And if I'm pretty damn bullish on Hood, you know, in the next year and a half, whatever that is, right? A year and a few months, as long as it's over 27.90 per share, this thing's going to print for me, right? It qualified for all of the upside on top of that. And then also, if I want to exercise these contracts, I'm going to be doing so at $20. So it's actually going to be lowering my average because the average was, I think, 21.17.
Yeah.
So that's how I land on those strike prices. If I want to do what's called lottery leaps, what I call lottery leaps, I would be picking this $30 or $35 strike price. I'm going to be able to control the same amount of shares, but then now I already know that I don't want to exercise that contract. That's why I use the term lottery leap, is because the only thing that I'm doing is flipping the contract. So if all I'm doing is flipping the contract, I'm banking on some upside during a certain amount of time. So I got to be right in direction and I got to be right on my time frame. Then I'm like, well, why pay this kind of money when I can do it at 30, 35, hell, even $40? And then also the beautiful thing that gets opened up is if I want to sell cover calls against those leads, the premium that I bring through the door is the exact same, even if I don't actually own the shares outright. So it gives me another income stream without the capital outlay. And it also, if I'm disciplined enough, like if I don't want to own shares and I want to be qualified for the 10X, then lottery leaps makes more sense because my capital outlay is a lot smaller. So it isn't paying me as much not to bring money through the door on that portion of the portfolio, if that makes sense.
Yeah. And the lottery leap, we don't need to get to 40 to sell this.
If there's a huge spike, and hell, it could just be volatility and a little bit of price movement, you know, these things will start printing for you a little bit.
Let me, I just want to pull up this $40 leap because I want to see what price it was before Hood tanked this week. So we're paying $245.
How do you do that? Because that's something that I don't do often, and I've tried to do it a couple of times, and I feel like I don't even do it accurately.
So it's easy on mobile. On their desktop, it's not as easy. But if you add it to your watch list right here, so like I did right here,
okay,
make myself a little bigger, and then you can. So you add it to your watch list on the options. Then you press weekly. There you see the big drop.
Okay.
So
man,
we would have been paying $468 on October 30th. Today it's $233.
Yeah,
it's definitely a discount. It's definitely a discount. 42% discount that you'd be getting.
Adding 50 lottery leaps at 35 or 40 makes a lot of sense. And then now we have carte blanche, if that's the right word, to sell cover calls pretty damn aggressively and manage those because, well, if those lottery leaps are printing, I mean, you know, we're doing pretty good.
Yeah, and I mean, look, I know sentiment just got hit this week, but at 28, you know, people were wondering if this thing's running to 40 by January, February. I thought 32-ish was a little bit more reasonable, but Look, if that sentiment goes back to normal, you get the election with over, the street kind of realizes it was kind of stupid to be upset about a 1% EPS miss, then 40, there's actually a hell of a deal, right? It's an irrational market behavior that creates an amazing opportunity. We just have to be correct, on the timing of it and direction. But
yeah, so the other thing is you got to be correct on the timing, or you got to go into this thing with the right mindset. So I'm thinking if we're not right, well, then it costs me a few more $1,000 and I'll roll this shit out to 2027 or 2028 at the time, because I feel like we will be right in the next 3 to 5 years. We might not be right there in this little time frame. Jesse Dow just did it with PayPal. Everybody, dude, they know this guy to the stake because he was down. He was wrong on the time frame by like a year and a half. He's not Nostradamus, it turns out.
Yeah.
But over time, he can be, and if he's been managing the positions and rolling them accordingly, he's going to make a lot more money than 99% of the people in the chat. I don't think he makes more money than me, but it's probably close. You know what I'm saying? Like, I'm just saying the guy knows how to print money with this fucking leap strategy. So you can be wrong and manufacture the win if the conviction stays there and you're able to double down, if you will.
But let's say Hood's at $20 in 2026 and we have a $40 call. Then we just lose, right? You can't manufacture that win. Then you're just
but you can put it on again for a little bit and then your leap didn't perform. Well, you know what else doesn't perform during that time, I mean? Your fucking shares.
Yeah.
So that's another argument that I've never fully understood. So there's that risk, there's that opportunity cost. It exists in everything. Like, people have created this narrative of asymmetrical investing where it's like there's no downside and only upside. Not in the stock market, bro. Like, you're not going to get all the risk and no reward and vice versa.
Yeah, we got Derek right here saying he lost millions in PayPal leaps. TJ, what would you say to this? Hood covered calls at 40 are up 70% for January 2025. Would you close those right now or let those?
If the idea was to close them, with January 2025, yes.
You would close them right now?
I did. I mean, because every day that these are covered calls.
Yeah,
right?
yeah, covered calls.
Leaps. I'm sorry. No. I'm milking that money, because then what are you going to do now? Take them off, not collect any premiums? Or are you going to take them off, reduce the strike price, and introduce another element of risk where you can just free roll for another 90 to 100 days and pick up the rest of the 30% on the contract? You see, like, that's where buying to close is such an art. It's not a science. It's like, if you don't have anywhere else to put the money, sometimes doing this is the best thing. You know what I mean? Like,
I'm also happy you said this, because, and I think this kind of brings up a little bit about what's going on to Palantir. So on Robinhood, let's say someone had 5,000 shares and Robinhood's at 28. This is why this game is so hard. If you sold a covered call to protect against the downside for January 2025 at 32, right? Very close to 28. Right. I mean, the premiums were incredible, right? And if you have 5,000 shares, 50 contracts, like, you could have made a lot of money. And then as Robinhood tanks, boom, you're good to go. If Robinhood went up, you would be kind of scared because you're losing those shares. So the level of insight it takes from a technical perspective, fundamental perspective, all this stuff to actually know what you think is going to happen and then maybe somewhat be right is really hard. And I think that's what's happening with Palantir right now. The covered calls on Palantir, even though it's down from 45, are incredible going into January, because there's a lot of, you call them crackheads, willing to buy, leaps at 50, or not leaps, but weekly, monthly calls at 50, 55.
The sentiment's very positive, and people ultimately think the trajectory of the company is still going up, and theoretically the stock would follow it.
So if Palantir doesn't get there, those covered calls are going to print. And I think it's a question now on how someone would navigate that position. Especially because the stock has run up a lot. And that's the other thing on Hood. It ran up a lot to 28. Palantir's run up a lot to 42. The covered call does make sense logically, but if Palantir's at 50, I think people are going to be upset. And that's why this game is hard. That's my point. This game is just really hard.
Yeah, it's not an easy game, but you just have to stick to your strategy, whatever that strategy is for you. And then you also have to be willing to be malleable, be very versatile, because a lot of times, like, I used to feel like early on in my career that I could dictate to the market, but the reality is Mr. Market's large and in charge. So we have to make our adjustments. My cash secure puts are getting crushed at 20 deltas. Then maybe I need to get a little bit better with the laws of supply and demand on the charts and look at my, look at some levels of support, and then maybe sell 15 deltas or something like that, if I don't want to keep getting put these shares.
Right.
But my covered calls are getting hammered, even if I'm doing 15 or 20 deltas, and maybe I got to go look at the technicals a little bit as well to get better at my game, because we're playing price wars with the market. So people, I know that I don't show a lot of the technicals or whatever it is because I do a lot of this shit. Like I know that Robinhood as of this morning was above the 200-day and above the 50-day.
Yeah.
So I'm like, man, it's, I could also look at be selling cash secure puts at like 21, 22, probably pretty safely right now. Like that's another way to bring in some money through the door.
I agree. And we did just touch 200 for like a millisecond. Do we want to go over the Amazon part of our portfolio and see what we're doing with Amazon?
Yeah. So Amazon, I've loaded up on this one, bro. Like I have loaded up. This is, I've decided that this is going to be the cornerstone, the pillar of the portfolio.
Oh, you want to graduate it to be like a SoFi position?
No, I wanted more than that. I wanted to be more because I want people to make fun of the portfolio, bro. I mean, SoFi is number one. I love SoFi, but I mean, dude, SoFi, Amazon. I mean, come on, do the fucking math, right? So, by the way, I didn't hear anything about earnings, bro. I was busy doing. Did you see what my wife made me wear for Halloween?
Can we share that? Hold on, can we share that,
bro? Dude, why does she hate me so much, dude?
What did you guys go to a party or something, or what did you guys do?
We went to some place called Doble M in the Valley. It's some fancy Mexican restaurant.
It looks like we might hit 200 folks on Amazon, by the way. Wow, look at this. Ken and Barbie. Is that it? Look at that, bro.
Oh man, dude, why did she do this to me, bro? Everybody was like making fun of me, yo. And I was just, and I don't give a shit. But at the same time, it's like, I kind of do. Everybody does. You know what I mean? I'm like, you got me over there looking like F Ken, and I'm saying fat Ken, but I'm really kind of thinking something else. It's just like, dude, like, why?
When you're married to a high class woman like your wife, this is what you got to do. She wants to dress up. You got to dress up. It is what it is.
Dude, and my wife lost like 3 to 5 pounds intentionally for this stupid outfit. I'm like, okay, cool. Can you please gain those 3 to 5 pound back? I think Barbie looking a little skinny. Women, they're so funny, bro. She was like dedicated in the little home gym to lose like this extra 3 pounds, and I'm like, maybe you might be killing yourself for a fucking photo op. I'm like, I'll gain the 3 to 5 pounds that you found that you lost. I'm gonna go find them. You know what I'm saying? But anyway, I just got back on the medication, bro. So I haven't eaten anything in like 2 days. I feel great. But anyway,
so what are we doing with Amazon?
5,500 shares now at 182. So not a great cost basis, but a great company. There's a difference, right? So owning great companies at good prices. I feel like I'm owning a great company at a decent price, not a good price.
So you have $1 million in Amazon, basically.
Yeah, right now. And I have all the covered calls, all of them for sale at 195 because Bezos has been selling, right? So I was like, I want to see if he's going to do it again to protect me. If not, I'm just going to keep rolling these about every 90, 120 days out and increasing the strike price by like 10.
Okay, so let's talk about this. So can we talk? When is the best time for you to roll? Because is it above your break even yet, or no for the cover?
Yeah, no, it is. It is. It's like right there. It was like what? Let me see here. It's right here.
So the break even is the amount of premium you got plus the price.
Yeah, so it's 202, but there was already a little bit of a roll involved. So I put it in my journal that if it hits 200, it's time to roll. Where's Amazon at? It's pretty much there, right? So essentially, this is what I'm looking to do. This isn't bringing a lot of money. This is a capital appreciation play. Again, whenever you introduce a menu item to your restaurant, you got to be able to categorize it. Like, what's this for? Is this for cash flow? No. This is a capital appreciation. This is the Austin gentleman in the chat where you're 10x. I don't think this is a 10x. I think this is a 2x, maybe a 3x. But I want to qualify for all of it, so I've got to be pretty.
I like that analogy. It's when you introduce an item into your menu. Because there's a lot of items in stores that are loss leaders, but they bring people through the door, right?
Condiments. That's why McDonald's and shit. You got to ask them for the ketchup, bro, because that shit loses the money.
Yeah.
You got to ask for napkins. Those, I was saying, the family, my wife's family owns restaurants, so they talk about the napkins. These freaking stupid environmentally friendly straws cost them a lot of money.
Yeah,
and like all this tree shit, bro.
No, I'll just say
restaurants.
Paper straws. If I was president, I would ban them day one. There's no reason we need paper straws. I legitimately, they would be gone. But
bro, I live in an area that's highly Democratic. Nobody voting for your ass down here.
that's probably true. Okay, so what do we want to? What is the strike you like rolling these to then?
I was thinking about 205, something like that. Just again, like you got to know, like, what do you own? Do I think Amazon's going to 300? Yes, not right now. So I look at all those things. So I'm like, it's for December already. So I always want to have a lot of extrinsic value on the contract. That way, if these shares were to get called away prematurely, it's going to be very expensive for the person on the other side.
And the way you get that extrinsic value is the way you get the extrinsic value is by having more time on the contract, correct?
Correct. So I've got them at 1220 right now for 195. Obviously that and dude, these were just like, dude, I bought 500 of these shares yesterday and I sold the cover calls yesterday just to match everything up so that my OCD would be in check. So I was thinking about this one was the one that I was kind of looking at, was like right over here in March, because this isn't anything that I want to monitor on a regular basis. And then I want to bring a little premium through the door, get a little Amazon dividend, if you will. And I'm like, dude, cool. Pay me $13,000 just to keep it on the books for a while.
So here's my question before you get this. 205 by March, the average person would look at 198 to 205 as not a big move.
Right.
What is your thesis on this if these shares...
My thesis is that I want to keep playing this game for the next 7 to 10 years. And if every 90 to 100 days I can get another $10 in capital appreciation, eventually I'm going to catch the stock.
Yeah,
because I don't have any intention of liquidating anytime soon. Again, I introduced a new menu item to the hamburger stand, but it's a long-term menu. Like this thing's going to be a staple in the restaurant, right? So I am okay playing this stock from behind, and then I will decide when I want to liquidate.
So question, let's say by December, Amazon is 208. So if it passes your break even from the 205, you just roll in December, even further out, essentially.
Yeah, like I don't care if I'm sitting a year out on a covered call at like 230 at that point. I've done it with Tesla for the last 3 years already. Because again, I always say covered calls are real easy when you're legitimately long the stock. The problem lies when you say you're long, but you're not really long. If Palantir were to go to 50 tomorrow, you want to reserve your right to sell those shares. That's cool. You're not really long that stock then. So yeah. I already know that there's not anything that Amazon or Jeff Bezos from the sidelines, because he's not that actively involved anymore, right? Like there's nothing that can happen with Amazon to make me believe that people are going to stop buying packages from them. And the AWS is printing at a pretty high level. The cloud, whatever the hell they do, right? Because I didn't even listen. I didn't do anything. It's because why? Because it's Amazon, and that's what I was looking for in the portfolio. Is I wanted a menu item that kind of manages itself.
Right.
I wanted a robot in the portfolio. Amazon's that robot.
The Big Mac, people will keep buying the Big Mac, is your point.
That's just the way that I'm looking at it, dude. I don't want anything that makes me do any more work. I want to work less and make more. And I think that Amazon can give me $30, $40 in capital appreciation over the next year. It might give more. It might give 70 or 80, and I'm only qualified for 30 to 40 this year, this coming year. But the next year, if I manage it accordingly, I'll be qualified for another 20 or 30. And then I start looking at, okay, is Amazon, do I need to be selling it? Because it'll be at like 4 trillion by then or whatever the hell it is. So at that point, you got to start looking at all of those things, right? Like it kind of, does it become like Apple where it's so damn big that it's hard to move the needle? I don't know. I don't know any of those things yet. But what I do know is I want it in the portfolio. Right now, I'm saying 7 to 10 years, but that could change in 3 to 5. I don't know.
Right.
But it's also a position that I feel like it's not going to cause me any stress. I know how to manage covered calls, and I don't need to be able to sell it right away. So I don't need that liquidity. So that's where covered calls can be an absolute pain in your ass. If you're in a situation where you're babysitting a covered call because the stock shot up, you lose all of that liquidity because now you got to wait out the contract for 3 to 6 months to be able to liquidate. And then during that time, the freaking stock comes crashing down and you lost that opportunity. And that's why people hate covered calls. My argument to you is you were selling covered calls on a stock you should have never been selling covered calls on because you weren't legitimately long the stock.
Correct.
Because you needed that liquidity. You just weren't being honest with yourself, or maybe things changed in your life. I don't know. But I don't think there's anything going to change for me. So I'm pretty safe doing this in my mind.
Yeah. Or you are super emotionally attached to the shares and you just don't want them to go away and you don't want anything to covered call, cash convert, anything. And then that's fair. But if you're in general, you're just long a stock, I see your philosophy of like playing it from behind, even if you are long.
This is monopoly to me, bro. Like I'm not gonna, use a big portion of my bankroll because I don't know if you remember when you start monopoly, they only give you a certain amount of money to work with. And if you start buying Boardwalk and Park Place before you build your monopoly empire, you might go bankrupt. You know what I'm saying? Like you got to pick up the Orientals and all the Baltic Avenues and stuff and kind of build your portfolio before you go dance with the big dogs. And that's the thing, like I am in a situation where we got plenty of capital, so I don't have those liquidity constraints, if you will. And I don't need to sell Amazon. Like if Amazon shoots up to 240 tomorrow, I don't need that liquidity. I don't need to turn that into a cash position because I don't think the sky's falling. And I don't think that we're going to go into a recession, depression, and all of those things. So I look at my macro outlook as well when getting into these, situations.
Yeah. And guys, on Amazon, so 200, we did touch it for just a second. I don't know if you guys saw it, but 200.5, that means those 890,000 shares were bought. And now the resistance at 200 is 5,000 shares. So if the buyers are there, getting above 200 shouldn't be as hard as it was last time. The big problem was at 1033, getting above 200, and that happened. So someone bought those 900,000 shares, and Amazon is free to run if there's buyers.
Yeah. Because other things that I've done in the Webull account, because I got Amazon over there too, guys. This is how I played Amazon over there. I'm over here January 2026, and I'm at $250, and I'm sleeping like this.
Yeah.
So I bought shares outright in the same $170, $180 range, and I sold 250 cover calls for January 2026, and I got it in my journal that says I'm going to look at that position in June.
Yeah.
At that point, again, I don't need the liquidity now, and I want Amazon to be able to run because there's all these other things. There's a comment there that something hasn't been priced in. Well, I don't think 250 priced in either because they're not worth 250 right now.
So right now makes sense to roll the call. However, is there any part of your philosophy that says, wait a second, my strike is 195, stock's at 199.
I don't have to do anything.
It could come back to 195, right?
Yeah. I don't have to do anything right now and collect theta. And then if I could be disciplined in that and Amazon does flounder a little bit for the next month or two, then some of that theta is going to get off the clock. And then whenever I do roll, I'm probably going to be able to roll up to like 210, 215 for the same 13, 14,000 that I was going to collect right now.
Let me ask you another beginner question in wheeling. Why is collecting theta mean that your premium gets better when you roll?
Because it's less extrinsic value that I have to pay to close out the contract. Because every options price consists of intrinsic and extrinsic values, right? Or sometimes just extrinsic value if it's out of the money. But every option that's in the money consists of those two key components, which is intrinsic and extrinsic value. Your extrinsic value is your theta decay plus your implied volatility.
Right.
So if I look at it here, like let's go back to the Amazon so we can, kind of bring the point home. If I look at this options price right here, it's worth $11.50, right?
You have $4 of intrinsic and about $7 of extrinsic.
Yeah, $4.50 is what I'm in the hole. That's how big your hole is. It sounds bad, right? And then the rest, you take that coefficient, subtract it from this guy right here, and that's going to be your extrinsic value. That is your protection against early assignment, because that is all of the profit that the counterparty would have to forego if they were absolutely determined to own those Amazon shares right now.
Right.
So why would they do that? I mean, logically speaking, there's no reason because Amazon doesn't pay that kind of a dividend to offset that. Whenever you're dealing with the stock and it's like you have to own that stock by a certain date, it's called the ex-dividend date to qualify for the dividend. Like if we're dealing with like a BITX, that's a pretty hefty dividend, or like 59 cents came in, right? This last month.
Yep.
Then they're like, well, shit, you're telling me that I only got to pay 20 cents of extrinsic to qualify for the 59, even though we're a month early in the contract or 3 weeks early on the contract. I'll do it because the person on the other side knows how to do math too.
Yeah.
So here, I don't run that risk. You know what I mean? And right now, I don't have I don't have any intention to do anything here probably for another 2 to 3 weeks minimum. Hopefully more, because again, there's a lot of uncertainty, the election, etc. But also talking about the election, it's a huge binary event. But I feel like Amazon's not really in that situation. They're like, I don't know whether you're Republican, Democrat, Libertarian, whatever the hell you want to identify as a dog or a cat. Dude, if you shop on Amazon because it's convenient, you're going to keep doing those things. And all of their other contracts that are in place for Amazon Web Services, I don't think they're going anywhere regardless of who the president is or isn't.
Yeah, even if you hate Bezos and capitalism, you will still order your Amazon products.
Because it's convenient, bro, and that's why people go to the convenience store. They know they're getting ripped off, but convenience is at a premium in this country.
Yeah.
You know, I mean, dude, I buy a lot of shit at Walgreens because I can get in and out of there in 5 minutes.
Yeah, even though it's more expensive. Yeah,
and I don't care. But yeah, be like, I don't care because my time is worth more than that in my mind. You know, I hate shopping. So when Chris is not able to do it, we can't send the cleaning lady. They send me to go buy shit. She knows I'm going to go to Walgreens and pay, you know, probably 2 times more than I could have Walmart. But I don't give a shit because I don't want to do it.
Why don't you use Instacart? Maybe
I don't even have that over here, bro. We have one grocery store that will do HEB. It's called. They'll deliver. I don't know if we have Instacart. I know we have the DoorDash thing because I've seen the DoorDash thing, and like Kristen's ordered food on that thing.
Okay, gotcha. Yeah, I don't use Instacart either, but I would think people.
So they're the guys that go shopping around in the cart for you, right? And then they bring you the groceries.
Yeah.
So we have a local grocery store that does have a delivery service, and they just drop shit off at your front door and call it good.
Okay, so we did Palantir, we did Hood. Do we want to talk about SoFi? Just give a quick look at what's going on with that one.
Yeah, so SoFi. Let's talk about that one, and then I want to bring up the scoreboard. Man, you have no idea what's going on with this scoreboard. It's crazy, bro. So this is how I'm playing SoFi, guys. Got the crap load of shares at 725. And I think this might have came down. Robinhood did some Mickey Mouse math, and they changed things on us on the average.
Yeah, cost. I have no idea what they did, and they didn't communicate it that well. So
yeah, but dude, it checks out with the tracker, I think. So
wait, so hold on. So is there a world in which they're taking your option premiums and using that as your cost basis?
I don't know, bro. They did give an explanation, but I was too lazy to read it. So maybe somebody in the chat that's more interested than I am, because at the end of the day, nothing was going to change, right? But there's 150,000 shares owned. I know what we paid, but you know they're saying that's the average cost. I thought the average cost was a little higher personally, but then I've got a lot of shares for sale now. I've entered into 1,500 cover call contracts for 12.5 at 11.29. Don't want to sell them, but I also can no longer afford to have this type of capital tied up that's not bringing in revenue,
right?
Because it's messing up the books. So those are the gimmies and the gotchas. You know what I mean? It's just like, I would love to be qualified for my 10X, right? Austin in the chat. I want to get a 10X on SoFi, but at the same time, I can't tie up that kind of money on a non-dividend paying stock it's still very early in their life cycle. I mean, I feel like it's going to go up and to the right, but it could go either way. You know, it could go either way.
So how much premium did you get on the 12.5 call?
So pretty decent, I think. It was 3 tranches because you can only do 500 contracts on Robinhood. So I got 10,000, 12,000, 12,000. So what is that? 34,000.
That's not bad.
So let's put that into context, right? So it's 150,000 shares, paid about $725 for them. So what does that emit? 150,000 times 725. So paid 1,080,000, whatever that is, 108,750,000.
Yeah. Call 1.08. Yeah.
Yeah. So what is that? 1.1 million, I guess.
Basically, yeah. To make the math easy.
Cool. And then that brought in for 1 month. That brought in $34,000. So this was just the way that I was looking at it. It was like a piece of real estate. And I was like, dude, you own $1 million house and you can generate $34,000 a month in premiums for agreeing to sell that house for 1.25. You do that deal all day long in real estate.
The 3% return in a month.
That's I got to do it. And I'll manage it. If it gets out of control, I'll roll it out 90 days to 15, even if I had to pay a small debit, I'm okay with it because 150,000 shares are printing. But then the other reason that it was kind of easy for me to do was because of the way that the overall position is set up. You've got the 1,500 share or the 1,500 contracts for sale at 1250, but then I've got all of these calls. I've got 500 long calls at 15, 200 long calls at 7 for January 2026. 200 long calls at 5. I'm sorry, these are covered calls at 15 for January. So I've got 2,000 covered calls right now on the stock. And then I've got 200 long calls at 7, 200 long calls at 5, 500 long calls at 10, and 500 long calls at 15. So I still feel like I'm qualified for a 10X, just not on the entire position, if that makes sense.
Which is fair. If you have 150,000 shares, it is very fair to sell off 20% of it at certain tranches. Like
right. And I recently did that on the leaps. I took a profit on the leaps.
Yeah.
I mean,
it is a very dude. It's again. Here's the other thing. If you don't give a shit about selling SoFi at 12.5. Then that's all. It just makes this so much sweeter, right? You don't care about selling the property at 1.2 million versus 1.1.
Right. So there's this one right here. I sold 500 contracts. I had 1,000 of them at 10. The leaps for January 2026, right before earnings. I sold off half of them and got 360. Had paid 166 a contract. So there was a realized profit there. It used to say it on here, but now I guess they took that little stat off. That was something that they were doing.
The 12.5 call, TJ, to you, are those gamblers buying that 12.5 call for 11.29, or are they realistic? How are you thinking of those people?
Dude, I really think that that's a coin flip, dude. Because it's one thing for it to get to 12.50. It's another thing for them to cover the premium that they paid for that call.
Correct, which is closer to 13.
It's stated on the strike price. That strike price didn't come for free.
No, this is important. We got to make a point of this. When you buy a call at $10, if you paid $2, it has to get to 12 for it to really make money.
Mathematical facts. So I'm looking at, okay, so what did we get collectively on these covered calls? It was like 23 cents, I think, right? So
So 12.50 plus they got to get to 12.73 for them to really get in the money on these calls.
Yeah, so don't tell me right here. Yeah, 12.72.
And here's the other thing: these expire in a month. If this was a leap and it got to 12.72, you'd be up a lot because the extrinsic value is so high. Right. This one, I mean, the closer we get to 11.29, the more your theta decays, which is bad for the buyer, good for the seller.
Right.
Which means it's got to get healthily above 12.73, which in your opinion is just tough on SoFi.
Yeah, because, again, let's talk about opportunity costs and kind of like bring that point home a little bit. Dude, $34,000 is a real opportunity cost. That's called bird in the hand. You're pie in the sky that SoFi could go to 20 via short squeeze and all that shit. That's bird in the bush. So it's like, to me, the bird in the hand is twice as valuable as the birds in the bush. And I don't have enough money to leave $34,000 a month on the table. I just can't do it at these prices. Now, whenever it was like the same situation was only giving like 15 or 16,000 because SoFi was at lower prices, then I'm like, well, I'd rather just hold out for some more capital appreciation, even though it's all unrealized and on paper. Here, we're talking about a paper gain versus a realized gain. This $34,000 that I could legitimately take out of the portfolio and pay for our expenses for a month and a half or two.
Yeah. 34 grand is not a small amount of money.
That's a lot of money, bro. It literally keeps the lights on for us for about 2 months almost.
The only way this thing gets really tough for you or for any option seller working with this much money is if SoFi goes to like 15. Then it's like, all right, this is a lot. But you could still manage that. But that's what people are afraid about. And I think your philosophy is the probability of a stock having a parabolic run versus the stock staying flat. It's just like it's night and day.
Well, it's also the fact that I can look at the last month and this thing's already gone up 42% in a month.
Yeah.
So it's just being logical.
Yeah.
Just being logical, the last 3 months, same thing, right? 46%. So I'm asking you to go what, another 15% or whatever that is?
Yeah.
Saying it's no easy feat. And then what's the market cap? What's the valuation on SoFi look like at those levels? Because it's already at what, 11 billion? So it almost 12 billion. So what we're asking it to be at what, closer to 13, something like that? Just doing some, I'm thinking about the outstanding shares, etc. I'm not that good at math like that, but it's going to be north of 13 billion. I mean, I'm just saying at that point, that whole shit about SoFi is like extremely undervalued. I don't think that argument holds a lot of water either at those levels. Because we just saw the earnings, right? We just saw, even if you take all of those things into consideration, the forward guidance, et cetera, we still didn't get a whole lot of Galileo action to justify this quote unquote hybrid multiple.
Yeah.
Now,
And
a Fortress thing that's high margins, but that's still not Galileo.
yeah, and there was only 60 million in profit. It's not like off a 697 million base. It's not like the net income margin is that good. So there's a lot of good things in the earnings, but your argument is there's not enough stuff to get it to $20 tomorrow, 15 tomorrow.
Aside from some sort of a short squeeze that I don't fully understand how that really works, to be honest with you.
So let me ask you another question as an option seller. Why are the buyers buying that 1250 call? Because if they don't buy it, you don't have a market. So why are they buying it?
Dude, that is something going on my 5th year that I don't have an answer for you. I don't have an answer for the genetic makeup of people with that, because it's so hard to be right. It's almost impossible to be right during a certain time frame. And that's why I'd rather be the casino and not the gambler in most instances. You can argue that I'm being the gambler a little bit when I buy the leaps, but I'm also got a lot more time on my side, and I can sell some cover calls here and there to bring some of that premium through the door to kind of de-risk myself, de-risk the situation a little bit. Yeah. So yeah, man, it's tough. I want to show you something else though.
Okay.
You want to look at the scoreboard?
Yeah, let's take a look at this.
What do you think it's at? Look at this, Amit.
So we have collected a total of 899 grand on premiums and the gains minus the losses on shares. Net premium 749. We're using 2.4 million in collateral, and we're up 150 grand on the P&L on the actual shares. We are only down, it seems like, on path.
And path, that position's over.
That's it.
Yeah,
everything else is green.
Oh, even Snow made money, bro.
Even Snowflake.
So one position that I do want to highlight is, or two of them, if we have time. I don't know where you're at with time.
Yeah, we're good. We're good.
Okay, so one is Amit. I would give you like A plus on how you've handled this position right here. This BITX position. Shout out to Adam. I don't know him personally, but he brought this position to your attention and you shot it out here. So we got 10,000 shares at 26.71. Bravo on that. We've got the cover calls at 32. But we understand that this is a leveraged instrument. So this thing could tank pretty quickly. You know what I mean?
And we're unemotional. We don't care if we sell it at 32.
We don't. And that's a real good place to be. But we have realized some money along the way. So this is the entire position. It's not a lot of... there's not a lot of transactions. So we started by selling 20 contracts. We collected 16,000, bought shares outright at 26.54, 2,000 shares, sold the cover calls at 16. So we essentially created a little bit of a spread there. And then we received a dividend of 12.52. They bought shares with that dividend. And then I bought another 1,000 shares at 25. Sold the covered calls at, got the 5,000. Then I sold more puts, collected 73.54 for the 24. So I matched up the ones we did initially. And then I sold those 45 shares that they had given us via the dividend because it was messing me up because we didn't have an even number on the shares. So the OCD got the best of me. Sold an additional 2 shares because I couldn't figure out how to do it all at once. Then collected another dividend of 18.89, bought more shares at 28.60, bought another 1,000 shares at 28.53, sold those covered calls, got in 10,000, bought 2,500 more shares at 25.69, sold those covered calls immediately 10,500. then bought an additional 2,500 shares at 26 and some change, sold to cover calls, then sold more puts, and then we bought to close those puts, gave back 12,250. So we realized quite a bit of money on those cash secured puts and collected an additional 58.92 in premiums.
Made some decent money on BitX.
So it's been good. It's been good. And then now we have these shares for sale and we'll let it ride. The only way that this thing gets back in play for us is if BITX tanks to like 28. Then we could be like, hey, we could sell more cash secured puts, maybe even at 23 or 22, and bring a shitload more money through the door. And then our covered calls will start breathing, and then we position ourselves to get even more dividends, and so on and so forth. So,
well, can we? Would it make sense to roll and collect a premium on BITX at all?
No, because the NAV erosion and stuff is really, really serious on this thing because they got to make good on that dividend as well that we're collecting every month. So I think right now the best way to play these things is very short term, because the more that I learn about these instruments, I just don't think that they're designed to hold long term.
100%.
And this Derek Law is saying a mouthful right there.
Yeah.
You know, so even if Bitcoin stays here in the $70,000 range, this thing could go to like 32, 31 over the next couple of months. And Bitcoin didn't do anything, but this thing's always moving. It's almost like having a call option.
It is. Yeah. Yep.
So, yeah. Look at this guy. Yeah. He should be in the chat. He should be over here with us. He seems to know this better than I do. So there was another one, dude. I'm struggling to find it here because I feel like I'm under the gun now. There's another one that I brought in via cash secured put.
CrowdStrike?
Yeah, I don't think you know how heavy I went on this thing.
Oh, this one. No, you told me about this, and I said, all right, I guess we will go for it. So Boeing, baby. American Defense and Airlines. Boeing.
So 20 contracts at 150 a minute. How do you feel? So you didn't know we were going this heavy. 300 grand, bro. On
300.
I just, dude, is this thing going to fall out of the sky like the 737s in the past? Like, what's going on, bro?
Well, actually, you know, when you texted me about this, I think you texted me a week ago about this. I liked it because it's down a lot. I mean, like if you were going to take a gamble, it's like, you know, it's a quality company that has a lot of shit happen this year, but Boeing's not. I mean, America relies on Boeing for a lot of things, you know?
Yeah.
So if we could get a fair price on Boeing and collect some premiums along the way, I didn't hate it. But 300 grand is a decent size that you put into it. I didn't know you put 300 grand.
Yeah, but it's not the acquisition price target. And again, it's for December, right? So I was thinking Santa Claus coming to town, all that shit, right? 140 is an acquisition price target. So again, this is a setup trade. Fully expect to roll this position if we need it to. And at 140, it's going to be the new Intel, dude. Take ownership. And 140 for better or worse.
So can you go to Boeing's chart? How much down are they year to date?
I'm pretty sure it ain't good. Let me see.
I think it's down like 60% year to date.
It's kind of bad. Yeah. No,
30%. Okay, so here's the question here. When a stock is down this much, typically this is actually so there's reasons. B, as a wheeler, this is what excites you or should excite you because the premiums should be theoretically up there. And C, sometimes when stocks go down 40, 50%, they tend to go up after that, right? That tends to happen. So what is your philosophy on dealing with companies that are down this much year to date from a wheeling perspective?
Well, it presents a pretty decent entry point that the company can get back on track, kind of like Intel, right? Like I listened to some of the Intel earnings, and you know, I feel a lot better about the Intel situation today than I did 90 days ago. I've seen the CEO talking to Congress or whatever. They're making it sound like this dude should be losing his job. He gets paid a shitload of money. They can't figure it out. Strikes, all this shit. I feel like Boeing's had a lot of headwinds for a while now, dude. Even since like before COVID. You know, they were trading, I think, at like $400 at one point. It's tough, but what I do like about it, before anything else, a lot like Intel, is I'm only willing to participate in something like this if I'm 100% convinced that they cannot go out of business.
Yeah.
Because if that happens, well, then absolutely screwed. And I didn't see a world where Intel wasn't going to be I don't see a world where Boeing is going to cease to
I see
exist.
no world where Boeing is not around. Maybe the stock doesn't do the best.
It's a duopoly with Airbus, right? As far as on the side of things. So there's that, but then Boeing gets a lot of defense contracts and other stuff that aren't just tied to the 737s with doors flying out and shit.
They got a couple billion this week from the Army. Like Boeing gets a lot of contracts. It's just the management has been horrible this year, you know?
Yeah.
And I would agree with Robert. I think Boeing is too big to fail. That doesn't mean the stock is the best stock, but it definitely is too big to fail.
Not at all, but it does get very, very attractive in this $120, $130 range. So if I can successfully sell 3, 4, 5 rounds of cover calls at 150, well, then it's almost like buying it at 130. Because I think if it was at like at 130 or 120, bro, everybody in the chat's like, oh, I'm loading up on Boeing and shit like that. So I always figure out what's that price for me. That price was 125. Like the portfolio would look drastically different if Boeing was at 125. Like I would be moving things around to try to scoop up shares. So I'm like, well, if I successfully sell 4, 5, 6 rounds of cash secured puts at 150, maybe eventually at 140, then I could take ownership of those shares and have an adjusted cost basis of 125.
Right.
If my conviction's really there, but again, I'm barely starting to dig into the company. You know, they do a lot of stuff that I wasn't even aware of, just to be frank. Like I feel like there's a lot of big companies out there that we don't really know that much about if you're not actively studying them the way that you study, you know, Robinhood and Palantir.
So what is the trade we have on this?
150 cash secured puts for December.
And we collected 12 grand of premium? Roundabout?
I should tell you here in the bottom. Yeah, it was two, yeah, whatever that is, 6,900 plus 5,450.
Yeah, 12 grand, basically.
Yeah, I feel good about it. I mean,
they had their strike resolved today, so that's why it's up today, which is good.
Yeah. So. See, again, I don't even know any of that stuff. That's good. That's why I have you. That's good. I mean, anyway, dude, I feel good about it. Bottom line is I feel good about it. Anything else here that I think is noteworthy? Do you want to see the huge ass trade that I made on TSO?
Yeah, let's look at that.
This is the reason why so much premiums come through the door. So the 15,000 shares were owned at 936. They're for sale at 15 because, again, I don't feel like these are the kinds of shares you want to own for long periods of time. You want to be very aggressive with cover calls, bring as much premium through the door, because if Tesla goes sideways, this thing's going down. That's just the reality of it.
Yeah.
So for January of 2026, all those things being said, I had this model that said that Tesla would have to be at about $140 for these strikes in January 2026 to be in jeopardy. All of those things considered. So I was willing to put 2,500 contracts at $573 for January of 2026. And that yielded a shitload of premium. None of these are rolls. So this is what we got, $135 a contract. So you're going to play that math.
So that's 350 grand, almost roundabout.
Yeah. So I was willing to tie up all of that collateral with things like 1.4. 1.432 in collateral for, what was the amount of premium you said?
Around 350. So that's a 25% return over what? 1 year?
About 14 months, 15 months. Yeah.
So that is about 1.8% a month, which is not bad.
So the idea is to be over 50%, but have more than 50% less on the contract, and then I could close those out, and that juices up the return during that time.
What do you think about Archer?
I have it in the portfolio. I can't say bullish on the space because it isn't a space yet. But they're trying to be a space. Dude, I have been studying these companies offline for about 3 years now, I guess.
Why? What inspired you personally?
Because I like that they could literally change the landscape of travel. Like I like the idea of being in San Antonio, Texas, and taking one of these bad boys to Austin, Texas, and avoiding that nightmare that is I-35. You could do that with 4 people, split a $200 tab, my goodness, dude, you're going to change the way traveling is done. I like the idea of being able to go to the front of the line at the airport, bypassing all this shit from JFK for a Uber Black ride.
Are you saying bypassing all the poor people?
No, well, not really, because they're talking about this is going to be like 125, 150 split between 4 people. That's kind of like Uber prices in New York.
Yeah, no, that's true. That is very true.
So I'm just like, dude, like for real. So it's just about all these heliports, whether or not they can convert all of those. Because if it's going to take you that much time to get to the heliport and all that stuff, then it's kind of defeating the purpose. So it's just whether or not there's going to be able to have enough places that you can access these whatever they're called, vertiports. So I see it being very, very sexy.
But is it because you?
I don't know.
Is it because you like traveling a lot? Like, what personally, outside of the idea, makes you think you would want to take these a bunch?
Because if you could do it and it's cost effective and it's a lot more efficient from a time perspective, and these things go 150 miles per hour.
Right.
I mean, my goodness, dude. It's just, to me, it's just an absolute no-brainer. And then on top of that, I see that a lot of successful companies being like, hey, let's pick 2 or 3 of those up in the inventory, because now we can get our corporate executives moving around a lot more efficiently, and that could save them a lot. So it's kind of like the poor man's jet, right, if you will, or a helicopter that doesn't make a lot of freaking noise. Dude, like legit, we've looked into a helicopter as a family.
Right.
But dude, that thing's noisy, bro. We've gone on like 3 or 4 of these little tour Vegas type shit on the helicopter thing. And he's like, we don't want to fly around in that damn thing, dude. It's crazy.
Yeah, Orange County to LA, 2-hour drive. Archer's 15 minutes. That is, I didn't even, the corporate executive thing is another thing. Like, that's actually a very
sports teams, bro. I could see sports teams like Dallas Mavericks, Houston Rockets, when they're playing with each other, hop on this thing. It's been, I mean, granted, it'd be harder there because you need like 3 or 4 of these things, right, to get the whole team over there. But I'm just saying, dude, I just feel like there's a lot of metroplexes that could benefit off of this type of thing.
Okay, so let's talk about
I don't know how it all works, bro. There's airspace, there's this, there's that. Are we really going to feel comfortable with all these eVTOLs hovering over it? I don't know.
So let's talk about the position. Why, can you scroll down? Why did you decide buying it at $3 or whatever that you're buying?
Because I just feel like I can manufacture the win here. 3 or 4 cycles, and I'm in the $2 range from a cost basis. So it's just like, okay, well, I'll play it out because I'm sure there's going to be a lot more dilution and shit. This is all pre-revenue stuff, right? So we got 10,000 shares at 307. I sold the cover calls at 350. Agreed to buy 10,000 more shares at $3. And I just want to keep doing that cycle over and over and over again. If I'm bringing in that type of revenue, 3 cycles, I'm already collected $1 in premiums. Now I'm sitting at $2. Now I could just chill out and see if it.
The volume on Archer is 3.35 million shares today. So you think this is good to wheel as well, or no?
Yeah, if you have a 3 to 5 year time horizon and you can handle dilution and stuff. That's why, again, I wouldn't be an advocate to own these shares and get your little 10x, because there's going to be a lot of dilution to deal with. These companies are they're pre-revenue, but like this company, I'm not sure if it's Archer or Joby, but a lot of their engineers came from Tesla. And then the Joby guy graduated from Stanford. He's like a super smart dude, as well as the guy from Archer, forget his name, super well-to-do guys. Both of these guys are. And then there's other people in the space. There's Lilium. There's a handful of them that are in this space, but they have like the who's who in engineering and stuff. And they're doing everything right. They're walking hand in hand with the airlines and with the FAA. I think the Air Force is like, hey, give me some of those. We could do a lot of silent missions, because like the Black Hawk Down thing or whatever, like that shit is real loud. These things are not. So it's got a lot of utility potentially.
It's also interesting because this thing's down like 70-80%, but as you described for the past 10 minutes, there's real potential. And so it could still go to 0, but wheeling something with real potential, there's liquidity for the options, and like they're actually solving a problem, which is travel and transportation, might end up being worth a gamble, which is what I think you're looking at right here.
Well, I looked at who's in bed with them to actually manufacture these. On one side, you have Stellantis. On the other side, you have Toyota. Those 2 companies know how to build shit.
Yeah.
So I was like, okay, I mean, if you can't build these things, it doesn't matter, right? But whenever they got in bed with companies that are proven manufacturers very efficiently, are they Tesla? No, but you could argue that Toyota's pretty damn good at building shit too.
And you are
Toyota. I don't know if Toyota's with Joby or Archer. I haven't done that kind of I don't know that kind of shit off the top of my head. But I know Stellantis is helping one of them, and if y'all can help me out in the chat, and Toyota is helping the other.
Yeah, and you are mentally prepared, because I know we're speaking really bullish on Archer, but still, to give a little warning, you are mentally prepared for this to go to zero if it happens.
Yeah, I don't think it happens, but yes.
I agree.
mean, I feel as long as I sell 5, 6, 7, 8 rounds of covered calls, you end up losing $1.50 a share. It's kind of, I feel like it was a pretty decent gamble on my part. And it's a gamble at this point. But if they do get all the approvals and stuff, because again, thank you, Chris, going through all the processes of getting a license to be able to do this thing, and the FAA is on board. You have, I think it's United Airlines or Delta. There's like two or three airlines that have ordered a bunch of these as well. So they know how to do that stuff with the logistics and so on and so forth. And I have a buddy who's written on the Midnight.
Oh, really?
Yeah, and bro, he says it is fucking amazing. My big issue, though, and I still don't have an answer to this yet, is where's the luggage going to go? I haven't seen that yet, because if you're talking about doing the whole airport thing, I haven't seen in any of their models. I haven't seen where you're going to put the luggage or how much luggage you're going to be able to take, so on and so forth.
I didn't know this. So the FAA chairman is working at Archer. I didn't know that.
Yeah, here we go. United by, you see Derek, bro. Why doesn't he have a link? I'm just saying, dude. So I've been geeking out on this thing. I have watched probably 30 hours of videos on Joby, because they're doing a bunch of videos trying to get this thing going. I even saw whenever freaking Joby crashed one of their planes. They were doing like autonomous or whatever, like remote control flying, and they fucking crashed the plane a couple of years ago. And I was like, ugh, you know what I mean? So it's one of those things. But I feel like they're essentially drones that carry people. I mean, for kind of the way that I look at it.
Yeah, here's the video of their Midnight right here. They also look really cool, dude. I mean, they look really cool.
The thing's legit badass, in my opinion.
Yeah, dude.
But essentially, it takes off like this, but then it flies like a plane. It like tilts or it flies like a helicopter. And then their decibel levels are like really low in comparison to a helicopter.
Yeah, it's actually really cool, dude. I'm not gonna lie. Like even New York to New Jersey, dude, the amount of traffic to get from New Jersey to New York is so annoying. Like this would solve a lot of problems. I agree.
Yeah, so I've got both of them, because I haven't decided. I can't decide. I think it's way too early which one's got the most upside. I would just be absolutely speculating. So I got 10,000 shares of Archer because it's cheaper. That's it, like from a share perspective. And then Joby got 5,000 shares, and then I've got them for sale at 550. And then I've got an agreement to buy 5,000 more at $5. And I fully intend to be in these positions for the next 3 to 5 years, because by that time, I think we're going to have a lot more color and clarity in the situation to see whether or not it could turn into a segment. Because what's the big bear case for me is Elon Musk thinks that they're going to fail. Because my whole thing, when I first started looking at them about 3 years ago, because I invested in them early and then they ran up like $8 or $9. I sold, made money, because I was like, this is stupid. Like, how are they going to come at this type of valuation when there's no money in sight as far as revenue? And then Elon Musk did an interview stating 3 or 4 reasons as to why he thought it would fail. But then somebody in the chat chimed in and they were like, well, it's also because some of his engineers went to go work at these companies, so he might just be like really, really bitter.
But what if he wants to make flying cars? That could also be, but it's not the same as the eVTOL, technically,
Yeah, I don't know. I just, my big play when I first started, like in my investment thesis at the very end, I think one of these would be positioned for a prime takeover for Tesla. And I was just like, oh, we could get 3, 4, 5x on that, on that whenever they signed that contract. That was like literally where the investment thesis landed at the end of the day, because I was like, with his pull, his power, etc., all the engineering, the manufacturing, he's like, hey, you guys have taken us to first base, let me take it home. You know what I mean? Like, but then he did the fucking interview saying, nah, this shit's never gonna work. So then that investment thesis is in the pooper right now.
Right.
Because that was, or I call it a speculation thesis, if you will, because that's all it is right now. So that's, again, we all have our pipe dreams. That's one of my pipe dreams. It's just a space that I'm really, really interested in. It's actually, dude, if I could buy one of these, if I could afford one of these, because I think they're about $2.5 million is what they're saying, I would definitely consider that as a way to travel in these areas, because like, dude, if it could get it to the point where I can go to Houston, I could go to San Antonio, not deal with the freaking airport, etc. The cost to run these is a lot cheaper than like a little private jet or whatever. I mean, it's no shit. There's a lot of wealthy families that would buy these things, a lot of businesses. I could see sports teams having them. So there's a lot of people that would sell them. But like, one of the businesses for, I'm not sure if it's Joby or what, they're not actually trying to sell their aircraft. They just want to use it as like an Uber taxi.
Yeah. That's fair.
So anyway, right. I think we're good, Mitt. What do you think? How do we do?
I think this was great. I think you guys got a lot of value, hopefully, from this segment. Every week, we are very grateful that TJ joins us every single Friday. If you want the Wheelers tracker, email amit@dailypalantir.com and just say, hey, Amit, can you send me the tracker? And I will send you the tracker for free. 2 things. Number one, TJ's Twitter. Please make sure to check him out on Twitter. Also, I'm putting his YouTube right here in the chat. He's having a Wheeler seminar tomorrow. TJ, what's the seminar thing you're doing tomorrow on your channel?
Yeah, so essentially it is doing an A to Z on wheeling as a business. Because the number one question I get asked is, how much money do you need if you wanted to make a living just doing this and only this? So the number that I came up with is about 250 grand if you're willing to tap into margin. Sell cash secure puts on margin as well. That could make you pretty damn close to a 6-figure income. Now from there, you got to be able to service your taxes, everything else. Your take home is going to be probably 50, 60,000. So I'm going to go into everything, dude, like on the mentality of this whole thing, like the psychology of this whole thing. And then we'll get into the meats, potatoes, the cash secure puts, cover calls, rolling, etc.
Well, what time? What time is it?
9 o'clock, 9 to 12 Texas time, Central time.
And 3 hours just live on your channel.
Yeah, dude. And I'm going to go into it. I have slides and everything to keep me focused. My ADHD LMNOP is going to be on point tomorrow. I'm working out. The noodle's going to be working, bro. I'm going to try to really, really give you guys good information. And then the other thing that I'm doing is I'm using the seminar to write about 80% of the book. So artificial intelligence is going to take all of that information from the seminar.
I like this. So
instead of archiving everything that I've done on the channel, is I'm writing the book tomorrow, Manufacturing the Win, via the seminar. Because I feel like I can't write the book, but I can talk the book.
That's so cool. So you're doing the seminar not only because you love everybody and you want to give them details. Selfishly, you're writing your book during this whole seminar. Dude, this is how AI is going to change the world, bro. This is crazy.
I'm writing the book tomorrow.
That is so cool.
Writing the book tomorrow because I've sat down, tried to do it, can't do it, bro. So I'm going to let ChatGPT, LMNOP, whoever the hell is helping me. I got the nerds on the channel that are doing it, bro. And I'm going to give it to you guys the best that I can. I got all of my analogies. TJ Cliche is going to be on fire tomorrow, bro. I am giving it to y'all because I feel like I can talk the book. I can live the book. I am the book, but putting it on paper, bro, I need help. There'll be disclaimers on the book saying that artificial intelligence was a big part of this whole thing. And that's all cool because, man, I told people I was going to do the damn book. I wish I never had. I wish I never had.
Dude, right? I hate writing. Like, I like Twitter because it's just like quick. You can write it. Even when I write long tweets, I'm in my zone. Writing actual, I never enjoyed it. But talking, I'll talk for 10 hours. Like, I just love talking.
It's fun. It's fun. So I want to be able to hopefully make it all make sense, make it all make dollars and cents. But a lot of it is going to be psychological, dude. Like, you got to really, really.
I mean, we have someone right here in the chat that I panic sold Hood at 2305 just a couple minutes ago. A lot of it is psychological, dude. Now Hood's at 2388. It's a lot of psychology in this fucking game, dude. Buffett, Tepper, Druckenmiller, they're managing their mind more than anything.
Did we lost a little bit of focus on the hood thing? Did you want to buy some long calls so that we can have that 10x upside that Austin was speaking of?
You're petty, dude. You're so
No, dude, I want to get a 10x, but the only way to do that is on the leaps for me.
Okay, what's strike? What's strike?
I get caught a lot, bro. I get caught a lot on these damn covered calls. So that's part of this segment tomorrow is I finally said, hey, you got to be the gambler a little bit, not just the casino. So there's a time and a place to buy some long calls as well.
So you want to do in the money or out of the money? What are you thinking?
I did. I mean, maybe we can meet halfway. Maybe $30 calls. I mean, how bullish are we? How bullish are we on it? How about see if it's in the money? Like to me, if it's going to be a shorter distance, I want to be in the money because it's easier to make a profit. If we're willing to go like 2027, because I think I saw 2027 on here.
I like 40 for 2027. I don't think that's horrible. It's a little.
Yeah, so I think right over here in this area. So it'd be $37, and then we're good on that aspect of it. But we know that if there's like a huge spike, we're up 50%. I mean, we could just close those things, right? If we want
that's the beautiful thing about the long leaps, right? If it spikes up, you can just sell it.
So what do you think? Maybe protect half the position?
Yeah, I think that's fair. 50 is reasonable. We can sell 25 covered calls against it. Yeah. You're not gonna. Oh yeah, 690. Yeah. 34 grand.
We're paying 34.5 for the right to buy 5,000 shares. Blah blah blah. So essentially, there it is. Could have got maybe done a little bit less, but anyway. So then now we have freedom to sell aggressive covered calls. I think on the next green day, I'll reach out to you and let's maximize the money that we bring through the door on those covered calls. And we are in agreement that we don't have to do anything with these cash secure puts right now because organically they might fix themselves.
Correct. Yeah.
Yeah. Sometimes you gotta give time. You know what I mean?
Yeah.
You gotta let it do its thing, dude. You gotta let data do its thing. I mean, this company is not broken. The stock has performed very, very well. You know, it's still clawing its way back. You know, like I mean, it went all crazy, right? It was like $40 or whatever it was when it first started.
Yeah.
It went down, and then it was extremely undervalued when you found it, and then it's been matriculating its way back up. So I think that it's actually a healthy pullback for the.
Honestly, yeah. And the market needed a reason to tank it down. It was a weird reason with the earnings, but it is healthy, dude. I mean, going to 33, 34. It would be a lot going into the election, rate cuts. Like you need a little bit of consolidation. I think that's what we got here. That's reasonable.
Yeah, for sure. All right, brother, we're good. I got to go annotate all of that stuff. I got to do some trading, and then I want to go hang out with my parents a little bit before I do FaceTimes the rest of the day with the members.
All right, quick word of the day with Mr. TJ. The wheel deal is incandescent, which is intensely bright or brilliant. I would have to say, TJ, you are very incandescent.
Thinking this Derek Wall guy is pretty incandescent, and so is that.
Well, see, this is why it's been cool to be me in 2024 because I have you who I can talk to about wheeling. I have Derek who's built.
Can you tell me about Derek? I've seen him on your channel before. Is he the dude that's like super fucking rich? Is that who we're talking about here?
He's very successful. He's built multiple companies. He's building a new startup right now. He's sold companies for hundreds of millions of dollars. He operates one right now in Miami called HubX, which is a B2B wholesaling marketplace. And he's a rock star, dude. He's a Silicon Valley legend. To me, I'm saying I got to write a book about him one day. I need to write a book about you one day, like a real book, the greatest wheeler ever known. And then for Derek, it's like Silicon Valley's hidden secret because no one really knows him because he's not that public, but like he's done very well for himself.
Is he the gentleman that's behind you being part of like a venture capital thing or the angel investing, whatever you want to call it?
He got me into Figure. Yeah. And
what is that? Is that the robot thing? Is that a competitor to Tesla? Or?
Yeah. Humanoid robotics competitor to Optimus. And it looks like they're going to turn out well. They could go to zero, but it looks like they're going to be a lot more than zero one day. And if Optimus wins, they're going to win. And so it's one of his biggest startups bets ever. So he doesn't invest in a lot of companies. He was early in a bunch of them like 10 years ago, but he's been kind of chilling on the sidelines. Figure was the deal where when there was an idea on a napkin in their Series A, he like went into it, heavy. So It's a big bet, and
he likes this Archer thing. What is his deal with Archer? Because
so
I am like super. I don't know why, dude, because I don't even like planes like that. But when I first saw the Midnight and then the Joby one and then the Lilium, that one's sexy, right? 'Cause it's a bigger version. The German company, I think Palantir was one of the SPAC deals that they did.
yeah, Palantir sold out of them. But the founder of Figure is the same founder of Archer, even though he's not at Archer anymore. That's why Derek really likes the founder of Figure, Brett Adcock. And so that's another reason Archer, has a little bit of excitement, because the guy who built it originally is the guy who's building what looks like could be potentially $1 trillion company,
Yeah.
So
that's awesome, dude. And Derek never comes on your channel like the talk, or it's just all offline.
no, he calls in here and there. He called in on Sunday, so
Gotcha.
here and there. One day we'll do a proper podcast with him, and the world will be.
Yeah, dude, I'd like to meet him on one of these virtual things, because I'm always like, if you want to get to places in life, you need to ask for help with people that have already done it.
Yeah, 100%.
That is like, I try to help people that are making $3,000 to $5,000 a month to make the kind of money that I make, but then I'm trying to figure out how to make 10 to 20 million a year. And so I go talk to my father-in-law, you know what I mean? Like, and he's like, because you got to work on your mind game, dude. Like, you got to, it's like act as if, right? It's like from that movie, The Boiler Room. Like, it's not fake it till you make it. It's act as if, like dress for the position that you want, not the position that you have, type thing. So mentally, I'm preparing myself to make $25 to $50 million one day, because I feel like I'm going to achieve that per year. But even though that's like a freaking 10x for me right now, you know what I mean? But I just feel like I have that ability. But I don't know if it's strictly going to be through selling options. Obviously launching the big hedge fund is going to be a big boost for me as well.
Yeah, it's always about your network, and that's so important. And this year, I've just been really grateful to have people like you. I mean, Bergman, Derek. There's so many people that I consider mentors. Chris, obviously, and it's important, bro. You gotta. And I hopefully this live chat. I mean, what I talked to you about on the phone is what we talked about for the past 2 hours, and everyone got access to it for free. So hopefully it just keeps giving more people.
Yeah, dude, the chat is so invaluable, dude. So invaluable, man. Dude, it's awesome. Like, when are earnings? When's this? When's that? Dude, it's like I got my little encyclopedias there. Remember the World Books when we were kids, or when I was a kid, we had this thing called the World Book Encyclopedia. I feel like in my chat sometimes it's like that World Book and the Britannica. Like, dude, it's crazy. Anyway, guys, I got to get rocking and rolling. Appreciate each and every one of you guys, man. God bless you.
Thank you, TJ. See you next time.
Bye-bye.
All right, guys. Cool. That's it. Again, if you want that Wheelers, look at what Steve just texted me. Amazon bitches. Fucking Steve, dude. Let's actually call Steve. Let's see if he picks up. But if you want the Wheelers template, just email him at dailypalantir.com and I'll send it to you. Let's see if Steve picks up. Let's see. Amazon bitches. This guy, bro. This guy. He might not be able to pick up. He might be at work right now. Steve, I think Amazon's is like second biggest position, to be honest. Yeah, he's not going to pick up. He's not going to pick up now. All right, so I think we'll try to get Steve on the Friday show today. He couldn't make up. He couldn't make up last week because he had some meetings. So hopefully we get him on Friday. And so later today, we'll talk about Amazon. Amazon did break 200, which is really nice to see. Now, is it holding 200 or did it just break through? Amazon is. Yeah, I mean, it broke through a couple times, but it's not really holding 200 yet. So I still think it has a ways to go before actually holding on to 200. Bayray, why are you so excited, bro? He's like all caps Amazon stock. It's at 199.98. Like, it was there at 930. Like, I think we have to actually get to 201, 202 before your calls start printing like crazy. And like we got to still, Amazon still needs to get above 200. Right now, it's just like touching it. It's not really getting up there yet. So we got to see if we get there. Steve's busy trading Pokemon cards. Yes, that's probably too. It's danced a few times. Yeah, now it's actually got to go to prom and legitimately win prom king and queen and get above 200. My prom, we never had prom king or queen. That wasn't a thing. I feel like that's only in the movies, but like during my prom, we didn't have that thing. It wasn't a thing. I feel like it's a 90s movies type of thing. All right, cool. That's it. I'll be back at 3:45. Amit@dailypalantir.com is the email. If you want the Wheelers tracker, I'll probably send it tonight or tomorrow. And then you guys can use that for all your wheeling and all your tracking. Maybe one episode TJ is going to go through how he manages the Wheeler tracker. I think that's a good episode we should do in the coming weeks. Like 30 minutes to an hour on like how do you manage the tracker? Because even that and keeping up to it and your bankroll management is very important. So if we're all trying to do this a little bit more professionally in 2025, that'll be a good segment from TJ as well to do that. All right. Thank you, everybody. It's Friday. If I don't see you on the market close, have a great weekend. We'll be back on the Sunday's Future Show at 7:45. I think we're doing Palantir Weekly tonight, if I'm not wrong. So if I don't see you on the market close and you join Palantir Weekly, I'll see you then at 11 p.m. Eastern. All right. Thank everyone. Have a great Friday, great weekend. I'll be back for the market close. Bye, everyone. Have a good one.